First of all, Bitcoin is digital gold. Second, Bitcoin is an emerging digital monetary network. Both of those are interesting and critical to corporate strategy. Let's talk about digital gold as harder money and market dynamics. Basic principle of market dynamics is capital is going to flow from weaker assets to stronger assets until every asset is equally attractive on a risk-adjusted basis. If I have one asset that's yielding 10% return and the other is yielding 5% return, and the risk premiums are exactly the same, then and the risk is exactly the same, then people are going to sell the one asset to buy the other asset. And of course, the prices will adjust until the actual yields are the same. This works with any asset, although it's kind of hard to calculate the risks with equities and real estate and derivatives and bonds. On the other hand, currencies are a more pure asset. So generally, weak currencies are going to have capital flow out of them into stronger currencies. Truly weak currencies may just continue to see capital outflow until the currency itself collapses. That's a dynamic that's driving this market. And the appeal of Bitcoin as digital gold is as a strong asset, and capital will flow to it. The second dynamic here is that we need to take into account. It's a technology dynamic, which is, digital gold is smarter, faster, stronger money. It's not just harder money. It's smarter, faster, stronger. It's monetary electricity, and it's monetary electricity flowing on a network. And Ross made this point. So you can build a Bitcoin into any financial product, or you can build it into any technical product. And so that means that Bitcoin as digital gold is interesting as a hard money asset to any corporation handling money. But Bitcoin as a monetary network is interesting to any corporation that has financial products or technical products. And so I'll leave those as two high-level thoughts. Now moving on to corporate strategy. What's every CEO think? What is the elements of corporate strategy? Well, first point, I want to grow my revenues and I want to grow operating income derived from the generation of revenues minus cost, operating income. Every company knows they want to drive revenues north and drive operating income north. Second idea, I would like to grow my assets and I'd like to grow my investment income. If I have $1 billion and it's generating zero, I have no investment income, I have $1 billion in assets. If I can drive that to be $10 billion in assets with a 20% yield and have $2 billion a year of investment income, better. The same idea of revenue holds for assets. So growing revenues, growing assets, and growing operating income and growing investment income, these are all objectives of a corporate strategy. And if we put on our shareholder hat, I want to create shareholder value and I want to preserve shareholder value. And the creation and the preservation of shareholder value is somehow, in many ways, related to how I drive revenues, assets, and incomes after we take into account the leverage on the balance sheet. So the next thought that colors our considerations here is in a macroeconomic environment where the currency is weakening, the road to serfdom is working harder, ever harder, to earn a currency growing ever weaker, and then investing the proceeds of that work into assets that are growing ever riskier. Or even for surrender your capital base completely. For for example, you wouldn't really think twice about if you had savings in your family, you wouldn't give them all away before you had your first child. You would think, I need to have money so I can support my children. So family would want to accumulate assets, not give them away. On the other hand, we're in a macroeconomic environment where there's continual pressure on corporations to surrender their assets, to either buy their stock back, which is a way of surrendering assets, or to issue dividends, which is another way of surrendering assets. So why do people buy their stock back, and why do they issue dividends? Well, the view is their cash and their treasury is not beating the cost of capital. So if the cost of capital is 5% and you're getting 0% yield on your cash, you're under pressure to surrender your treasury assets. And of course, that's good for the shareholders, but it's awful for the company because the company is decapitalized. It's the same as giving away all your family's assets. It's good for whoever got the assets. It's bad for your family. What's really dysfunctional? Well, the idea that you would issue debt to pay a dividend. What if I borrow $1 billion, dividend out to the shareholders? Now the company owes $1 billion. The shareholders have the billion, and my customers and my employees just owe $1 billion. So issuing debt to pay dividends isn't really good corporate strategy. In fact, you see the last 20 years is littered with bankrupt companies that actually did LBOs. They leveraged buyouts, they issued debt, they paid huge dividends to their shareholders, and then the company itself is rendered insolvent by misfortune or a difficulty in business. Issuing debt to fund operating losses, not much better. If the company is losing 100 million a year after year, and it just borrows $1 billion and keeps losing money, that's also a road to serfdom. Funding consistent business failure with debt is just putting off the inevitable. Issuing debt to buy your stock back, not really much better. If you issue $1 billion of debt, buy $1 billion in stock back, well, the shareholders have take off with the cash. They look to invest it, but your company has $1 billion in a liability. You've created a little bit of leverage, but you burden yourself with liabilities. Now, why do companies do these things? Well, because debt is cheap and because they're under massive pressure from outside groups to generate a positive return on their capital. And as the cost of capital keeps going up, they can't, or at least you can't with traditional treasury strategies. If you're investing in government bonds or T-bills and the cost of capital is 7%, well, you're not beating it. When the cost of capital goes to 15%, and that's about where we are right now, probably 15% or more, there isn't any conventional treasury strategy that's going to yield more than 15% risk-free interest. What happens next is there's this massive pressure to give the capital back to the shareholder because they realize that shareholder value is not going to be preserved in cash. Now, that's a way of capital preservation. If I take tens of billions of dollars and I dividend it back to shareholders, the capital is preserved because they're going to presumably invest in something that will beat the cost of capital. But it's a method of corporate destruction. The companies, which create the jobs and they create the products and the services, they're being destroyed as the capital flees into some other place. So what causes this? It's macroeconomic pressure. If the environment was only growing the money supply at 2% a year or 1% a year, there wouldn't be so much pressure. When the macroeconomic wind is blowing at a 5% monetary expansion, which is what we've been in for the past decade, there's a lot more pressure. When the cost of capital goes to 15%, becomes extreme pressure. And now every company has to make one or two choices. You either have to decapitalize, which is kind of like self-destruct. You're going to, capital is lifeblood. You're going to self-destruct, or you have to recapitalize with an asset which is going to appreciate faster than the rate of monetary supply expansion. This is where Bitcoin comes in. Now, I think there's a useful metaphor that you can use to try to figure out what's a good corporate strategy with regard to Bitcoin. And I'll call it the parable of the Argentine rancher. Let's say you have a ranch in Argentina, and it's a profitable ranch in Argentina. And this is sometime in the distant past, 10 years ago, 20 years ago. And what if I told you macroeconomically that you can expect the Argentine peso to weaken versus the US dollar by about 25% a year? This is not such a far-fetched idea, because the peso went from 1 peso to the dollar, to 2 to the dollar, to 4 to the dollar, to 8 to the dollar, to 10, to 20 to the dollar, to 40 to the dollar, to 60 to the dollar, to 80 to the dollar, to a black market rate in excess of 100 to the dollar. So the Argentine peso has collapsed against the US dollar in that range. So let's say you're a really intelligent business person and you run that Argentine ranch. If you knew this was going to happen, if you knew the Argentine peso was going to weaken in purchasing power against a benchmark, and the benchmark we'll say is the US dollar, what's a rational corporate strategy? Okay, by the way, this is not that hard. First, you're going to take 100% of your Argentine pesos in your treasury, and you're going to convert them to US dollars. Because if you have $100 million in pesos, when it's 100 million pesos, if you look out, eventually you're going to have 100 million pesos worth $1 million, and you're going to lose 99% of your wealth. Okay. So you convert your 100 million pesos into $100 million. First step, simple step. Next, I'm generating 10 million pesos a year from the business in cash flows. What are you going to do? You're going to convert all 10 million pesos every year into dollars immediately. As soon as you generate peso in cash flow, it becomes a dollar. And if you do that over 10 years, you're going to have 100 million pesos become the discounted amount of dollars. It won't be $100 million because the discount rate is 25%, but you'll capture 25, 30 million US dollars worth of value. If you don't, your 100 million pesos over 10 years will be worth $1 million, right? So you're capturing $24 million instead of $1 million by converting your cash flows. What would you do next? Well, if I know that I'm going to have 100 million pesos over the next decade that have a net present value of $25 million if I convert them immediately, what if I go to a bank in Argentina and I finance the cash flows? I go and I borrow 100 million pesos now against the next decade of cash flow. I convert the 100 million pesos into $100 million. And so instead of waiting to lose $70 million or $75 million worth of cash flow value, I immediately lock in the next 100 million. So I finance my future local currency cash flows because they're weakening. So what would you do next? Okay, I converted 100 million pesos of cash into $100 million, and I saved a $99 million loss. Then I financed 100 million pesos into cash, and I saved another $99 million loss. Okay, so I'm up $200 million. What would I do next? Well, I would go and finance all of my fixed assets on that ranch. I've got all this property. There's no debt against it. I put a mortgage against it, and maybe I put 100 million peso mortgage against that ranch. I'd convert that to dollars. And when 10 years have gone by, I'll have another $100 million. So I have 300 million US. If I don't finance my ranch will be worth 100 million pesos in 10 years, and that 100 million pesos will be worth $1 million. So it's another 99% destruction. Okay, finance your cash flows, finance your fixed assets. What would I do next? Well, I might actually think in terms of issue equity in my ranch. If I could actually sell ownership, let's say my ranch was worth 100 million pesos. I might sell 100 million pesos worth of stock in the ranch, convert that into $100 million. And otherwise, in 10 years, I'll have a ranch worth 100 million pesos in stock, which will be worth $1 million. So you would basically finance anything you could finance. You would you would issue equity in the local currency and convert into dollars. And those are all balance sheet activities, right? I'm basically converting cash, financing cash flows, financing fixed assets, and I'm issuing equity in the currency, which is going to weaken so as to buy the currency, which is going to strengthen or hold its value. Now, that's the balance sheet side. What about the P&L side? Well, on the P&L, I would want to shift my sales to markets that pay me in US dollars. So if I can sell my existing product, my steaks, my whatever, into the US and get paid in dollars, then that's probably a good idea, because $100 million a year worth of sales is going to be worth $100 million every year for the next 10 years. If I keep 100 million pesos a year worth of sales, then they're going to collapse. So my revenues will collapse. If they're in Argentine pesos, they'll continue, they'll hold their value in dollars. So I would redirect my sales and marketing to the hard currency market. Now, I would probably, what if the United States market or these other markets required a special type of product? Maybe I have to freeze dry or I have to package my steaks to ship them long distance. I'd create a new product for that market that I could sell in US dollars. If I'm a CFO, I would want to enter into contracts that are denominated in, I want my revenues to be denominated in US dollars. I want my costs, my purchase contracts, to be denominated in local ARS, in local pesos, because that way my costs will collapse, whereas my revenues will hold their value. It will look like my revenues are exploding through the roof. It'll look like if I'm selling in dollars, converting back into pesos, it'll look like my revenues went from 1 million pesos to 2 million to 4 million to 8 million to 16 million to 40 million to 100 million to 200 million, et cetera, because I'm shifting between those two currency systems. Ultimately, what I want to do is I want to expand my business in the strong currency, i.e. the USD markets. And I might even decide over time to relocate my entire business. If you take this to the extreme, sell everything, convert to USD, and then relocate large portions of my business or my marketing operation to USD markets. So that is, in essence, a hard money strategy. That strategy is the playbook that any corporation in any country on earth that had a collapsing currency or a weakened currency would pursue rationally, even without considering the technology component we have at play here, right? If Bitcoin is just digital gold and it's harder money, then this is a macroeconomic idea that you want to be thinking. Now, it's more than that, right? Because Bitcoin is a monetary network. So there's a technology aspect, which provides another opportunity for CEOs, but we'll come to that in a second. So big idea. Let's talk about Bitcoin, corporate strategy for Bitcoin. If you want to maximize shareholder value, you want to preserve or create shareholder wealth, then you can either work on a balance sheet strategy for Bitcoin, or you can work on a P&L strategy for Bitcoin, or you can do both. The balance sheet strategy for Bitcoin is convert your fiat cash flows, your treasury, into Bitcoin as much as you think you can. Second, convert fiat derivatives into Bitcoin. If you have investments in stocks, bonds, real estates that are denominated in the fiat currency, which you expect to weaken, right? You won't be protected over the long term, because if you have a stock which is going to generate $1 billion worth of pesos, and the peso is going down by 99%, the stock is also going to depreciate in the same way. So if you're a corporation holding a treasury in cash, you convert it to Bitcoin. If you're holding a treasury in stocks, bonds, real estate, or other cash derivatives that are valued based upon cash flows, you would also sell those, convert those into Bitcoin. You could issue debt in dollars, and then you can convert the dollar proceeds, the fiat proceeds, into Bitcoin. This works, by the way, in pesos. It works in euros. It works in any currency. You in essence issue debt in the local currency, and you convert it into the strongest monetary asset, which is Bitcoin. You could also issue equity, right? If you've decapitalized your company, if you're running with a very thin, if I'm Apple Computer, instead of issuing $100 billion of debt and buying back $100 billion of stock, maybe I issue $100 billion in equity, and I buy $100 billion in Bitcoin, because if Bitcoin is appreciating at 200% a year, and you're investing in a company that's growing its cash flows at 20% a year or 10% a year, it's dilutive to the shareholders, right? You want to actually invest in the thing that's appreciating the fastest. And right now you've got 10 years of history of Bitcoin appreciating at 200% a year. If when you decide what you're going to do, you have to consider, is your forecast 100% a year, 50% a year, 20% a year? What is the appreciation rate you're going to forecast? I think that it's very reasonable to expect that a strong money asset is going to appreciate at the rate of money expansion, plus with an additional driver of technology utility and technology diffusion or adoption, with a third driver, which is just broad-based network adoption. And all of that gets you to a number which is in excess of the expansion of the M2 money supply and the cost of capital. So convert your cash derivatives, and then issue debt, and then issue equity, and then if you can, finance your future cash flows, or convert your future cash flows directly into Bitcoin, right? These are all balance sheet strategies you can pursue, depending upon what your balance sheet looks like and how financeable your company is and what kind of access to equity or debt lines you might have. Every company on earth can do that, right? Every company has some amount of treasury and assets. And if you're highly levered, right, you can issue equity to get less levered. If you have no debt, you can issue debt. And if you have debt that's invested in something, you can refinance it. So the balance sheet strategy applies to 100% of companies. What about the P&L strategy? Well, P&L strategy consists of the following ideas. Number one question: can I build an open product powered by Bitcoin? And can I build a product powered by Bitcoin? What does that mean? Well, let's say I have a mobile payment application like PayPal or Square. If I allow you with one click of a button to convert $10,000 US into $10,000 worth of Bitcoin, I've created a mobile app, and it's plugged into the Bitcoin monetary network. And of course, I'm going to give my customers one button to convert a $10,000 liability that's going to depreciate in value by 15% a year into a $10,000 asset, which is going to appreciate in value at 100 or 200% a year. That's a product powered by Bitcoin. Now, what is it? What do I mean when I say open or closed? If I allow you to buy a whole Bitcoin, And I also allow you to take custody of the Bitcoin and transfer it to a hardware wallet or to a different custodian. It is an open system, open product. And I might very well get 100 million new customers that want to buy a Bitcoin on my mobile app and move it to another custodian. Coinbase has an open product powered by Bitcoin. What about closed product, closed system? Well, what if I actually let you click the button and buy a Bitcoin, but you can't move it off of my product, off of my mobile device? That's closed or proprietary. Okay, well, on one hand, it's less appealing to people that want to be able to take custody of their product. On the other hand, it would be more appealing to the shareholders of your company, because if $100 billion of Bitcoin gets purchased on your mobile app and you can't move it off of the mobile app, you become a bank with $100 billion worth of permanent capital. If you have a business model that generates a 1% fee, then you're going to get 1% of $100 billion. And you're going to get it until your customers exit that relationship. And if you have a closed or proprietary system, they would have to sell the Bitcoin and pay capital gains tax to exit. And that might be, if the capital gains tax goes to 45% and you have $100 billion of capital tied up in your mobile app, then your customers will have to incur a $45 billion tax in order to exit your mobile app. So that's kind of customer lock-in. Okay, well, if you're a libertarian, you're going to hate that idea. You're probably not going to want to buy that app. If you're tax efficient, you're going to hate that idea. But, maybe I make it easy. I give you low fee or no fee, or maybe I give you 2% back, or I give you a benefit, or maybe just people want to do it because I'm the only game in town. I suspect that if Apple or Google let you do this and they deployed it to 1 billion people, they would probably have hundreds of millions of people that might not mind being in a closed system. I mean, after all, lots of us have our photos or communications or digital rights or our passwords locked up in some of these cloud-based systems from Apple and Amazon and Google. And so you can actually capture the Bitcoin asset into a closed network, or you can have it in an open network. It's a business strategy. I have opinions about what I like. Other people have opinions. But the point is, when you're sculpting your product, you decide, is it a proprietary product or an open product or a mixture of both? And there's a continuum there. You can also drive revenues on your P&L by building Bitcoin tools. You can build software tools. You can build hardware tools. And of course, you can offer Bitcoin professional services that are critical to everyone in the space. So all of these things will drive revenues, and they'll drive cash flows if you choose to enter the space. So let's rifle through some examples of companies right now. Grayscale. Grayscale offers a closed-end fund, and it's powered by Bitcoin. And it is an example of a closed product. So if $10 billion flows into the fund, then that gets converted to Bitcoin. They issue shares. The shares might be sold in the open market, but the Bitcoin, the $10 billion of capital, stays in the Grayscale product. If Bitcoin doubles and doubles and doubles again, eventually Grayscale has $100 billion worth of assets. If their business model is a 2% fee a year, they'll eventually have $100 billion of assets with $2 billion in revenue, growing at the rate of the Bitcoin monetary network forever. It's a good business. It's a great business. It's very interesting. Fidelity. Fidelity has a different business strategy. They have Fidelity Digital Assets. You can buy Bitcoin on the Fidelity Digital Asset platform. You can custody it with them. So they generate fees from custody. They generate fees from buying and selling for you. And you can take delivery of your Bitcoin. You can move it off of their custody platform into your hardware wallet. So it's more of an open product rather than a closed product. But but they've got this this custody solution which is ongoing, and to the extent they offer you good services, then they will accumulate billions and billions of dollars of assets and expand that business over time. NYDIG. NYDIG is an example of a business that's a hybrid. They've invested their balance sheet in Bitcoin. They have substantial treasury holdings in Bitcoin, and they sweep cash flows into Bitcoin. And on the other hand, they offer brokerage services and custody services and value-added products, and they offer funds. And these are all products that are powered by Bitcoin, and they all meet a different requirement. So they're actually driving revenues, driving operating income, driving assets, and driving investment income all at the same time. PayPal. PayPal has more of a closed product. They make it very, very easy to buy Bitcoin and perhaps to sell Bitcoin. It's not so easy to take delivery of the underlying Bitcoin. When 100 million people have bought Bitcoin on the PayPal platform, they will have migrated tens of billions of dollars of capital onto the PayPal platform. They're in essence a consumer bank using Bitcoin as a monetary asset. Square. Square has offers you the ability to buy Bitcoin, trade Bitcoin. They're more open with regard to Bitcoin, and they will allow you over time to take custody. And so it's a slightly different strategy. Marathon is a Bitcoin miner. They actually have on their P&L a very direct idea, mine Bitcoin. But on the other hand, on their balance sheet, they bought Bitcoin. So they also are exposed on the balance sheet and the P&L. MicroStrategy. MicroStrategy has a balance sheet exposure to Bitcoin. We actually converted our treasury into Bitcoin. We sweep our cash flows into Bitcoin, and we've issued debt, which we then convert into Bitcoin, right? So we've got a leveraged balance sheet strategy for Bitcoin. Coinbase. Coinbase is actually trading and offering custody services and other related services, and a fairly open model on top of Bitcoin. Binance. Binance has got a broad range of services, and they're moving in. Not only are they trading and custodying services, but they also offer derivatives for futures, calls, puts, etc., and even payment type services. And they're evolving into a broad-based consumer and institutional bank for Bitcoin. Bitmain. Bitmain generates hardware. They create hardware that you can use to mine Bitcoin. It's a very special purpose tool for Bitcoin. So what are the general opportunities here for Bitcoin P&L strategies? You can get in the mining business. If you get in the mining business, you're going to want to find a clean, cheap, renewable source of energy. But anybody can do it anywhere in the world. It crosses all regulatory jurisdictions. You can be an exchange. You're going to want to have exchange capabilities. You can broker Bitcoin. You can be a custodian of Bitcoin. You can be a bank. You can be a commercial bank where you're offering extending loans or helping to generate yield or the like against Bitcoin as collateral. You can be a fund. A lot of corporations benefit from investing in Bitcoin as a fund. Funds under some circumstances can give you GAAP accounting treatment and investment income, which is more favorable on a balance sheet or a P&L than having intangible asset accounting treatment. So I as a company might want my Bitcoin to be held in a fund, either because it's easier, I can execute quicker, or it's more secure, or because of my charter doesn't allow me to hold the underlying asset, or because I prefer the accounting treatment that a fund might offer me. And so this is valuable. You can be in the derivatives market for Bitcoin. Here's an interesting one. Bitcoin's going up at 200% a year. The world's full of people that are afraid to own it, even though it's going up on average 200% a year over a decade. on the other hand, they would, if JP Morgan or Morgan Stanley said, we will guarantee you 10% taxable yield every year, you would have hundreds of billions of dollars flowing into those products. If you gave someone a structured product that guaranteed 10% yield, you could keep the other 90% yield. So if you create a bank that issues a structured bond, a bond that yields 5% or 10% or 20% over 5 years or 10 years or 30 years, people would buy that, and you could keep the extra 170% yield. All you have to do is post the equity as the collateral, and then you have to be a creditworthy counterparty. So you could think of this as like a Bitcoin swap. In traditional markets, people would say, I'm going to guarantee you 160 basis points, and in return, you're going to pay me the short-term interest rate. That's a swap, short-term rates versus a fixed long-term rate. Well, if you give someone a fixed 10% yield on Bitcoin, give me $1 million, I'll invest in Bitcoin, I'll give you 10% forever, but you give me everything above 10%, that would be pretty lucrative, right? So there are interesting financial businesses where you get into issuing swaps and issuing bonds. All you got to do is be a credit-worthy counterparty and have some equity capital so you can stomach the near-term volatility. This is a nation business. A similar angle on that is insurance. Right now, insurance, people buy insurance, they pay premiums. Those premiums are getting invested on insurance company policies into things that yield 3% a year. Imagine if I took your insurance premiums and I invested in something yielding 30% a year. Imagine if I invested in something yielding 150% a year. You could, in theory, give someone a life insurance policy where they pay in $100,000 of premiums, and then, on their death, it pays their heirs $50 million, right? Some huge amount of money. Or you could reverse it, and you could offer people life insurance policies that cost 1/2 or 1/3 in premium by investing a portion of those funds into Bitcoin instead of into 30-year swaps, because a 30-year swap yields 160 basis points for 30 years. It's an awful instrument, and yet people fund with it right now. So insurance is ripe to be disrupted. Credit card is another interesting P&L strategy. People pay 12 to 20% for unsecured loans from credit card companies. What happens when they actually post Bitcoin as the collateral? If I basically moved my Bitcoin to you and you gave me a 6% loan or a 3% loan, I could eliminate all that unsecured debt. In fact, you could pretty much rip tens or hundreds of billions of dollars of capital away from the credit card companies, and you could move it to a consumer bank that uses Bitcoin as collateral and issues consumer loans against those. And that takes you back to the PayPal example. PayPal talks about they're going to allow you to fund your purchases off of a Bitcoin account, but really the future of this business is I post $50,000 of Bitcoin or $20,000 in Bitcoin, and then I borrow against it. And as Bitcoin appreciates, I never sell my Bitcoin. I never incur capital gains tax. I pay 5% interest against an asset appreciating at 50% a year forever. And so you can reform consumer debt. If you're a device company, look, the screaming opportunity for Apple Computer is build a hardware wallet into an iPhone, or build multi-signature into the Apple Watch, the iPhone, and the iCloud. There's a world where you will be able to take your Bitcoin off the network, move it. What is it? Cold storage, or is it sort of the key is sitting multi-sig between the iCloud, your iPhone, and your Apple Watch in some secure relationship. They can build the secure elements into the computer, into the wearable, into the hardware device, into the phone, or into the back end of the network. I think this is an opportunity for Samsung, for Apple, If you build software like Microsoft, you can build support for Bitcoin into Windows. You can build it into Android. You can build it into iOS. You can build it into all your cloud offerings. You can build it into your backend server offerings, and anybody in the hardware business probably has a play here. If you're a semiconductor company like Qualcomm or Intel, the obvious play is to actually start to spit out SHA-256 ASICs or secure elements of the like. And, it's a market that's going to explode. If you do data centers like AWS or Microsoft or Google, well, the greatest data center is that Bitcoin miner. And if you create modular Bitcoin mining data centers and you're back-end integrated into semiconductors, you could drop them in the middle of Africa, on a pad next to shut-in or stranded energy. And that could be an interesting thing. Software companies, well, we already talked about the operating systems, but for Facebook, for any kind of messaging company, you can build support for the Bitcoin protocols and the Lightning protocols into Twitter, into Signal, into WhatsApp, into Messenger applications, into any social network, any communication network. And that's the network opportunity. I don't really have time to discuss all of those right now, but I'll just move on to just one final set of thoughts, which is there's a macroeconomic wind blowing. It's going to impact $400 trillion of capital. That capital is sitting in fiat instruments that are being debased. That capital is going to want to convert into strong money. And so if you support an on-ramp to convert that layer of money in that regulatory jurisdiction into Bitcoin or a derivative of Bitcoin, you've got a massive business. So think about a Cartesian system. There are layers of money, there are jurisdictions. Consumer savings is type of money. Retirement accounts is a type of money. Institutions have money. There are equity funds with money that can invest in the stock market equity. There are debt funds. They have another flavor of money. There's corporate cash, treasury reserves with another flavor of money. There's state and local governments with flavors of money, pension funds, annuities, federal governments, futures and options market. They're all flavors of money. In the US, there's a sort of regulatory jurisdictions. If you can solve the compliance issues, you can convert that flavor of money into a Bitcoin derivative. It'll be a different problem in Argentina. It'll be different in the EU. It'll be a different set of regulatory jurisdictions in the UK or any other country. So if you're in this business, you have to solve the regulatory compliance issues that are changing. Then you have to offer a product for that flavor of money. And don't fall into the trap of thinking that there's one size that fits all. There isn't. There's someone who can click on a button in PayPal and they can buy some Bitcoin and that's all they can do and they'll be happy. And there's a corporation that can buy a Bitcoin fund and they can buy $1 billion of it in a day, but that's all they can do. And they'll be happy with that, but they can't buy the one in the UK or Malta. And there's a company in the UK that can buy it a different way. If you solve the problem of how you transform the layers of money in the jurisdictions into Bitcoin derivatives, then you're going to see trillions of dollars of capital flow, and you will either capture the capital in your bank or in your app, or you'll enable it and you'll get paid. So with that, I want to wrap up with just a big idea. If you have a weakening currency, right, the real issue is capital flight from the nation, capital flight from a company, capital flight from a family. If you're a corporate CEO, you need to preserve your capital. Then you need to invest your capital in something which is strong money that's going to appreciate faster than the rate that the capital and your cash flows are losing their purchasing power. right? So, like, stop the bleeding, right? The idea that you should give up all your capital and decapitalize the company, leverage yourself up is the equivalent of bleeding George Washington to death, right? The physicians thought they were going to save his life by bleeding all of the toxins out of his system. But capital is blood. It's not a bad thing. When the cost of capital goes up, then the solution is not give up all your capital. The solution is expand your balance sheet and invest the capital into strong money that's appreciating faster than the rate of money expansion. All of these corporate strategies, they all come down to the same idea, which is generate strong money, find a way to attract strong capital, attract Bitcoin or Bitcoin derivatives as revenue, find a way to generate operating income based upon those strong revenues, find a way to hold that capital on your balance sheet, and then make sure that you're converting and financing all of your other assets, which are fiat derivatives, into the strongest monetary asset you can. If you do those things, then there's no reason to think that your purchasing power won't appreciate, your revenues appreciate, your income, either operating income or investment income, will appreciate. Your shareholders obviously will react favorably to that. Shareholder value will appreciate. Your stock price should go up in the public market. And the private market, your balance sheet and your earnings will simply appreciate. And that should continue for quite a while, right? We're at the beginning of a very, very long trend here. And so with that, I have more stuff to say. I don't have time to say it, but, follow me on Twitter and stay tuned. And we'll share more on these topics as time goes by. And meanwhile, I will cede the floor, and we'll be moving on shortly to our session on the corporate playbook and legal considerations and finance considerations. So thanks for being with us today.
Тест. Имат реклами. В мен да ги мютна. Мют бе. What the fuck is happening? Окей. Да. Добре, да, Майкъл определено се е подготвил. Старай се човека, но за първи път да го видя притеснен. Буквално за първи път да го видя притеснен. Имаше записки, обикновено няма записки. Очите му щъкаха. В долния десен край на стрима, на ъгъла, на екрана, но реално, което е долу вляво на него, и определено си проверяваше записките и гледаше и така нататък, и там за Final Thoughts явно някакви ключови думи си е записал, и докато събере мислите, видимо, как да кажа, беше притеснен. Сещам се в Reddit ли къде, бях прочел един коментар, който беше, че трябва да сме благодарни всички ние на Майкъл, защото, как да кажа, благодарение на неговата работа ще се ускори адопцията на биткоин. Нали, никой не знае какво е бъдещето, нали, говорим тук за World Reserve Currency да стане един ден и така нататък. Нищо не се знае. Наистина има шанс парите да скочат, Китай това, 51% атака, 1001 атак вектора има. Всеки един от тях е ужасно труден, но е възможен. И с действията на Майкъл, всички тези възможни атак вектори се намаля шанса да се изпълнят. Защото благодарение на него, нали, влизат тия влиятелни и богати хора, влиятелни и богати корпорации, ще влязат. И веднъж като влязат, вече поне щатите отпада като риск. Щатите отпаднали, за мен е гейм овър. Те в момента държат World Reserve Currency, Китай да скача и да се тръжка и да пляска, няма да има никакво значение просто, ако щатите на страната на биткоин. А те ще бъдат, ако корпорациите им са на страната на биткоин, защото реално политиката се държи от корпорациите, а не и политиците да държат корпорациите в джоба си и те да ги регулирали или знам се какво. Не. Всичко е въпрос на рушвети, всичко е въпрос на къде е капитала. Да. Да, но наистина за първи път да видя Майкъл Селър притеснен, да видя да трябва да се концентрира, а не просто да остави да му тече мисълта и код както ще каже и така нататък. Но много ми хареса аналогията. Идеята е той не им продава биткоин и казва биткоина е superior къмто долара. Това, което казва е нещо, което всеки американец би се съгласил. Песото, шиткоин, инфлация, за нищо не става, несигурна валута, така. И нали, ако работиш там, ако имаш там една фирма, веднага превърташ всичко, го прехвърляш в долар, за да не ти го изяснява инфлацията. И ти в края на краищата, като си го превърнал в долар, като се предпазва от инфлация, то като има инфлация и такова. И същи долари, като можеш да купиш много песо и така нататък, ти си нали, напреде с материала и реално нали, показва колко полезно би било за една фирма в една такава нестабилна икономика да се прехвърля всичко в долар. И всеки американец, естествено, защото Америка, we great nation in the world, нали, естествено, като чуи такова нещо, че долар е най-великия и хваща аналогията. Тя естествено аудиторията му най-вероятно, как да кажа, да са над средното IQ. Ще станат после аналогията, че както сте съгласни, че долара е superior към тия суперинфлационни валути, така и може би ще може да прозреете, че биткоин е по същия начин една алтернатива на долара, която обаче да ви задържа стойността. Така че да, доста... За жалост сме изтървали съвсем първото отварянето, но втората лекция, която водена от Майкъл Селър, без съмнение до момента много силна. И така, първа съм.
All right, good afternoon for those of you who are following along from the East Coast, and good evening, good morning to others. This is the third piece of the Bitcoin for Corporations segment that we're hosting at MicroStrategyWorld.now. Thank you all who are joining us and who have joined the first two segments. Hopefully by now, after hearing Ross and Mike talk about the why of Bitcoin, and then after hearing Mike talk about the how a corporation might invest in Bitcoin, you're getting pretty excited. And probably at this point, you're wondering, okay, what do I do next? And that's what this segment is really about. It's about the what. What are the steps? What are the things you need to think through from a finance perspective, a legal, a governance perspective? Another way to think about this segment is, as you know, I've thought about it is, what did I wish I knew about a year ago when we went through this journey of investing a significant part of MicroStrategy's balance sheet in Bitcoin and treating it as our primary treasury reserve asset? So we'll go through a playbook. We've actually open sourced a lot of our documents now on our Bitcoin channel on our MicroStrategyWorld.now site on MicroStrategy.com. So if you want to pull up the Bitcoin project roadmap document, you can follow along a little bit. We also have some slides here that high level you can also follow along through. Before I get fully started, my name is Phong Lee. I'm the president and CFO of MicroStrategy, and had a big role in helping form the strategy for Bitcoin at MicroStrategy and also deliver on it. And I have here with me Jeremy Price. Jeremy, you want to introduce yourself?
Thanks, Phong. Hi, I'm Jeremy Price, MicroStrategy Senior Vice President of Financial Planning and Analysis at MicroStrategy. I also serve as the company's head of Treasury and Investor Relations. I've been with the company a little over 18 years, and I've had various positions in finance and consulting and operations. Most recently, I've been a part of the executive team leading the development and execution effort of our balance sheet strategy, which includes our investment in Bitcoin.
Awesome. Thanks, Jeremy. If you didn't follow along there, Jeremy, in his roles over at Treasury, IR, and FP&A, pretty much ran a large portion of the financial side of our investment in Bitcoin. So let me jump in and just sort of walk everyone through the phases that we went through. The document you see in front of you that's available on our website is a bit genericized, but it really does follow most of the steps that we MicroStrategy went through in this process. And I think it'd be very beneficial for all of you who are considering something similar. You heard Mike talk about all the different ways to invest in Bitcoin, whether it be a P&L strategy, whether it be a balance sheet strategy. We're going to primarily focus on the balance sheet section here, which is what a lot of other publicly traded companies are looking at. And so we'll walk through it top down. But the first piece before you really start anything is you really want to figure out what is your purpose, right? You know, is this a P&L strategy? Is it a balance sheet strategy? Do you want Bitcoin to be your primary treasury reserve asset? Do you want it to be a portion of your investment? Do you want to get into Bitcoin mining? Do you want to run a Bitcoin node? Do you want to get on the blockchain? Do you want blockchain analytics or blockchain technology to be part of what you want to do? And this is really a conversation that needs to happen at the executive level, right? It's a major strategic initiative for a company. And for us, we had these discussions with Mike, with myself, the rest of the executive team and the board. And you'll see as we go along here, getting that level of alignment is critical. And so getting the alignment on the overall strategy is really the first piece here. And maybe, Jeremy, you can shed light on what exactly is MicroStrategy's strategy. A lot of you who are listening probably already know, but it's probably useful for those who are not as familiar with how we're treating Bitcoin overall.
Yeah, Fong, thanks. You know, we decided on a balance sheet strategy and made Bitcoin our primary treasury reserve asset. What does that mean? We basically converted all of our cash to Bitcoin. We converted our excess cash flows into Bitcoin. We will convert our excess cash flows into Bitcoin. And we've also acquired debt and converted that cash into Bitcoin. And so the balance sheet strategy is a buy and hold strategy. It's different than choosing the operational model or the P&L strategy. You know, for example, mining Bitcoin or using it in our day-to-day operations. It's a very straightforward approach that we felt made the most sense for us, given the company is a business intelligence company and the vast majority of our employees, you know, 2,000 or so, are focused on developing business intelligence products and supporting our customers.
Yeah, and you know, that's an interesting point you made there. Even though this is a pretty fundamental part of our strategy and our valuation, it doesn't have to be that distracting, right? You want the executive team, you want the board aligned, but of 2,000 employees in our company, probably 5 FTEs were able to pull this all off in a fairly short period of time. And that gets into this next piece. What is the internal team, right? Who is really going to work on this so that you can go move quickly, nimbly, but also have all the right experts in place. And in this case, you want to know who the champion is. In our case, it was Mike. As you probably all know, Mike Saylor, our CEO, was our champion. You want to get a finance working team together. You need the CFO in place. That's myself, Chief Accounting Officer. You want somebody who's responsible for SEC reporting. If you're a public company, you want your treasurer. You want somebody representing tax, internal audit, investor relations. All those pieces are pretty important. And there are all dimensions that you need to be aware of and work through. Also getting a legal team in place, right? Our general counsel, who you hear from later, Ming Shao, critical from a legal perspective. Having attorneys on the corporate side and also attorneys on the contract side lined up. And then there's an important and sometimes not thought about component, which is your technology team or your IT team. In that particular case, you know, your CIO and or your CISO need to be involved because there are security matters and risks that arise with an investment in Bitcoin also. And then bringing that team together, talking about the purpose, talking about the objectives, and then really starting to lay out a timeline and a roadmap, right? Like with any major project that you take on as a corporation, we want to have a timeline and a roadmap in place. Who owns what are the key activities? Jeremy, maybe it's useful for you to shed some light on the timeline that MicroStrategy went through.
Yeah, look, the timeline, you know, there's a lot going into the planning effort, but the timeline, I think it took about 4 months for the planning phase. And it includes all the things that Fong just talked about, getting alignment on strategy and identifying the team and getting a sense for the types of things that you're going to be tackling. And during that time, obviously, it became clear for MicroStrategy that Bitcoin was the asset class with the best store value and upside. So we had made our decision. And once we were aligned on that strategy and the overall plan, I think it probably took about 2 months for us to complete the process of executing, whether it be board approvals, executing on the plans for governance, finance, and IT considerations, and onboarding our vendors and being able to acquire Bitcoin.
Great. And the final, I'd say, pre-planning step, if you will, now that you have your strategy in place, you've got your internal team in place, it's really getting a team of advisors in place. And this is pretty critical. There are probably in the number of dozens, not hundreds of people in the US who work in the intersection of Bitcoin and of corporate law and of corporate accounting and finance, who really have been working in this space for a long time, call it 5-10 years. You'll hear from some of them later today on the legal side and on the accounting side, but you really want to talk to and work with folks who have done this a few times before, who aren't learning it for the first time. And so on the finance side, on the legal side, you want to have corporate governance attorneys who can advise you. You want to have regulatory and SEC attorneys who can advise you, and the contracts folks. You may have some folks in the house, but here I'd recommend, unless you sort of have people who are really niche and expert in these areas, it's worth going outside and finding folks also to help you out as you undertake this. On the finance side, you want to have some accounting advisors, right? You'll hear from some later today. Tax advisors, folks who understand internal controls as it relates to cryptocurrency, treasury, and then your auditor, right? Like, those who are public companies, you have an auditor, and you want to make sure they're aligned too. And so those are all pretty key pieces. In addition, if you're thinking about investing in a fund, or if you're thinking about raising equity or debt as a strategy also included in here, you'll want to have some bankers involved. And so getting this team together and defining your strategy, getting the team together, really then lays out all the rest of the steps that you go through from here. And it's something that you definitely don't want to short shrift. It's something that you want to think through fairly thoroughly. The next set of steps that we'll talk about is corporate governance. And in this particular case, we'll go a lot deeper in the next session, which is Bitcoin legal considerations. But at a high level, you want to make sure you go through all the steps to inform yourselves, conduct your fiduciary responsibilities, get the board on board. First thing is just do some research, right? Like you may think you know a lot about Bitcoin, which is awesome, but not everyone that's on the team may know a lot about Bitcoin, right? And there'll be varying degrees of knowledge. The awesome part is there's a ton of very good research and documentation, whether it be from large banks, well-respected publications, to YouTube, to Twitter, to articles written all over the place, and including those things that are published by publicly traded companies. We, as I mentioned, have a lot of our materials now available on our website. Also, we have a Bitcoin portion of our website that is more geared towards MicroStrategy and what we've done, but is also a useful resource. And what you really want to do is bundle up the best things and get everyone up to speed, not just on sort of Bitcoin for corporations, but the background of Bitcoin, right? Like assign them some reading. There's nothing wrong with doing that. It's good to get everyone on the same footing. And the other thing that you do by doing this, and as many of you know, is once you've done the research and once you've gone deep, it is very intellectually stimulating. And most people, by the time they've gone through it, understand and are big advocates of Bitcoin. So you'll have a team of people not only who are well read and well understood, but who now are also driving and all rowing in the same direction. You'll want to put that stuff together and start to summarize also your investment strategies in the past, right? You want to talk about how does Bitcoin fit into what has happened in the past, right? What are some of the key considerations that then you can use to facilitate board and management decisions and get people on board? And it's there is almost a light bulb, a switch that flips when people start really saying, oh, this makes complete sense. Sort of like what Michael and Ross have been through, right? Like there is an education process. Some it takes minutes, some it takes hours, some it takes days, some it takes weeks, usually not months. But when that flip switches, you'll have an team of advocates who are ready to move forward and really just completely change how you look at your business and your treasury strategy. From a regulatory perspective, you want to put together all the key regulatory considerations. When you start thinking about how you are going to invest, which we'll talk about a little bit later, there are things that might come up, such as Investment Company Act implications and considerations that you want to go through. And then you also want to look at conflicts of interest, right? You know, one thing that you'll find out, which will surprise you maybe, is as you start looking at the team and asking, so do you own Bitcoin? People will surface and say, oh yeah, I've had Bitcoin since 2013. I've had Bitcoin since 2015. Those are considerations when you start getting active into the Bitcoin market and start to trade, to purchase, either through funds or directly. You'll want to know who has what and what conflicts may exist also. Maybe this is a good time to segue quickly into the actual documents that we've made available. And Jeremy, if you don't mind, just list off what we made available in terms of open source and redacted documents from our Bitcoin work.
Yeah, we shared 7 documents with everyone to help them develop their Bitcoin strategy and get a feel for what it takes. The documents are on the landing page on the Bitcoin for a Corporation section of the world.now site. The first provides a summary of the key considerations for corporate investments in Bitcoin. It correlates very nicely with the track that Michael just wrapped up before this. The second, which we're talking about right now, is really focused on the project roadmap. You know, what are the things you need to do? It gives you a playbook for the major phases and next steps to consider in developing and executing the Bitcoin strategy. The remaining documents are best suited to address a number of governance, finance, and IT considerations. So the third document is the Treasury Reserve Policy that provides a framework for implementing and managing corporate treasury with Bitcoin as the primary treasury reserve asset. It includes examples of how to define what cash will be used for investing and who is designated to approve transactions, what employees are authorized to carry out the management of the policy, security protocols, and other key governance considerations. The fourth document is the Bitcoin trading policy, which provides a framework for thinking of conflicts of interest, use of corporate information in personal transactions involving Bitcoin. You'll also see examples of who's impacted by the trading policy, what constitutes material non-public information, and the like. So the fifth is contractual considerations for digital asset custodians, in which you find essential information in establishing a relationship with a custodian of your Bitcoin. And any company that plans to acquire Bitcoin should consider their holding their digital assets in custody, which is considered cold or offline storage, not connected to the internet. Custody is the equivalent of a bank vault to store your assets. The legal team will talk more about the policy and contractual considerations in their session after this. The final 2 documents provide a framework for accounting and tax related to Bitcoin. The document provides insight into Bitcoin controls, balance sheet accounting, how to measure Bitcoin value and evaluate it for impairment, how to account for the sale of it, and ultimately, you know, the implications, the accounting implications of the investment. So Vaughn will talk a little bit more with the Deloitte team about that. There's a document from Deloitte as well that talks specifically to the tax considerations.
Great. You know, I've received questions quite often as to why are we doing this? Why are we making all of our work that we spent hundreds of thousands, if not millions of dollars in advisor fees and our own time putting together? And there's really 2 reasons. One, we as a corporation are very bullish on Bitcoin. We believe it is the future for many corporations in a P&L strategy. But even before that, a balance sheet strategy. And there's really no reason why every publicly traded company in the US and more so the world shouldn't at least have some of their treasury in Bitcoin, if not all of it. And to help with that vision and that belief, these documents can really spearhead the efforts, and so can these sessions. And the only thing I'd wish is that they were here, when we started this process close to a year ago. The other thing is it's very consistent with the ethos of Bitcoin and of cryptocurrency, which is to open source and to share openly the work that we've done. And that's important to us. And we believe in that in terms of a worldwide currency. We believe in that in terms of what MicroStrategy, the company, does. You know, if you think about our software too, right? We provide, we're an independent BI company that believes in opening up our platform so that we are not platform dependent, we are not source system dependent. We let people access our code via APIs, et cetera. It's very consistent with what we believe in financially, we believe in from a corporate strategy, and we'll continue to do. And I guess the third reason is a bunch of people, a bunch of folks in public and private companies have asked us for the documents. And we said, well, why don't you sign an NDA and maybe we can share with you what we've done, or we can just make it available to everyone. So we're excited that we're doing it, and hopefully you all find it useful too. Let me go on to the next phase. And this one is very close to me and close to Jeremy too, I know, which is really the finance and the IT pieces of planning. Here, there's a lot of analysis to be done. And you know, as you can look at our accounting memo, it's quite thorough. And that was a big part of what we needed to do, which is to understand how we should account for Bitcoin. There is GAAP precedent that we'll talk about later, but there's specific situations that every company, ourselves included, get into. So you need to understand the accounting considerations, a lot of thoughts around tax, right? Whether you, you know, sort of have a loss or a gain on your Bitcoin on your balance sheet, how do you tax for that? And then intercompany and inter-border, you know, movement of money for and Bitcoin also has tax implications. Internal controls is a big one. You know, as we work with other providers, whether it be exchanges, whether it be custodies, whether it custodians, whether it be funds, making sure that they have all their right controls in place, SOC 1, SOC 2, you know, 2 reporting, and all those types of things have to be considered. Also, you know, I'd mentioned considering the Investment Company Act and seeing that applies to you. Whether the company and what company entity to use as an investment vehicle, that's important to know. And also, you know, looking at audited financials at the Bitcoin vendors and partners that you're going to be working with. So a lot of analysis to do on the finance side before you make that first investment into Bitcoin. And then also, where's the money coming from? Right? What are the sources of funds? What funding needs may you have? Are there sources of funds onshore, offshore? Do you need to repatriate cash to be able to invest in Bitcoin? Both of these areas, I'll call it the accounting, tax, treasury analyses, are not much different than opening a new bank account, right? They're akin to that, or they're also similar to if you were to decide to invest into a new treasury asset, invest into a corporate bond, invest into a fund, but they come with an additional layer of learning. And that's where having advisors in place who sort of have done this before are very important. The IT side, sometimes people don't think about, right? Like the reality is when you as a corporation, public company, are to invest in something like Bitcoin, you're gonna raise your profile. And in doing so, your social profile, your security profile. And so you have to think about what are the IT risks, what are the security risks, is your IT network and infrastructure, is it resilient, right? Like you may be subject to more external attacks, potentially a DDoS attack, phishing attacks. Do you have those right pieces in place? Have you thought about that? Impersonation. And so you want to work with your hosting providers, ISPs, cloud providers, and you want to do pen tests. You want to have some security partners in place, right? So you don't want that to be an afterthought after you made an investment in Bitcoin and you find that some bad actors have thought and found out about you and want to do something to try to either access your corporate network, disrupt your network, or even get to your Bitcoin somehow. So an important consideration that sometimes organizations overlook. And then the next one, you know, we get questions all the time, right? What is the insurance landscape like out there for Bitcoin and cryptocurrency? And Jeremy, I know you spent a lot of time getting to understand the landscape. Maybe you can share with the audience some of what you learned through the process.
Yeah, thanks. Look, the first question we asked was, is there such a thing as Bitcoin insurance? And I think everyone will be relieved to know that obviously there is indeed a market for Bitcoin insurance. I think first you should start with your custodian, who should be providing some sort of coverage. While custodians may not insure all of your Bitcoin, depending on how much you're investing, they should offer liability coverage that will protect you in the event of loss, typically with respect to issues that occur from within the custodial services company. When discussing insurance with a custodian, you want to focus on key exclusions, as policies often carve out certain issues from coverage. You also want to make sure you're added as an additional insured on each custodian's policy, and make sure that you see the endorsements so you know what you qualify for. You should expect that the custodian will provide at least some insurance coverage as part of the service they're providing. You shouldn't be paying an upcharge for the basic coverage. And it's important to note that, the custodian's insurance is not going to pay for or won't provide coverage for bad actors or theft or negligence arising from within your own organization. In order to get that type of coverage, you're going to need to acquire supplemental insurance. You can expect that custodians would have arrangements with insurance carriers or relationships that can offer that supplemental insurance, and they might be able to introduce you to some of those brokers. This type of insurance program is typically called a specie program, and the insurance market for Bitcoin is still in its nascent stages. But and as a result of that, the costs are relatively high to other corporate insurance programs. So you should know that going in. For supplemental insurance, you should work with your broker, but you're likely to focus your time on your crime policy, your cyber policy, and your D&O policies. And as Fong's mentioned a few times now, you'll want advice from an expert or multiple experts on what's best for you and your company, depending on the amount of your investment and the transaction risk associated with your Bitcoin and governance practices. I focused most of the commentary on custodians. It's also possible to get insurance on hot wallets or wallets that are connected to the internet, often associated with exchange wallets. But we don't really recommend holding your Bitcoin in hot wallets in the long term. And you can expect that the cost of insurance on those hot wallets will be even higher than the custody wallets.
Thanks, Jeremy. All right, so next step, big one. For us, it was big. Investor relations strategy, public relations, communications, announcements, disclosures, SEC disclosures. You really want to think through, what do you want to communicate? Through whom do you want to communicate? What channels and how? When we announced our Bitcoin strategy, we were the first major corporation to have invested in Bitcoin. Now, there's a little bit more safety in numbers, MicroStrategy, Square, MassMutual, other crypto-specific public companies. And so the waters are a little bit warmer. But you still want to understand, especially with your existing set of investors, how you want to communicate to them, because they may be looking for something different, expecting something different. So this is an important part here to get out to your analysts and investors proactively as you do this. But I think you'll get a more receptive audience and a more knowledgeable audience than you may have in the past, especially with the interest that we've seen in Bitcoin and corporations in the last, I'll call it 6 months or so. And then the final big decision, and this is an important one, is how do you want to invest? You go direct and want to own and hold your own Bitcoin through a broker and through a custodian, and that's what MicroStrategy has done, or through several brokers and several custodians, or do you want to do it through a fund? There's time to market and probably ease of accounting if you work through a fund. And if you work through a broker and several custodians, then you have more control of your Bitcoin. All right, you have more control of whether you want a buy and hold strategy, a buy and sell strategy, et cetera, et cetera. So that's pretty important. And the answer could be both, right? You could have a diversified portfolio. Is it Bitcoin only, or is it other cryptos, right? We chose Bitcoin only because we believe it is the superior cryptocurrency. And is the dominant one, but you may want to have others. You may want to hedge, and that may be appropriate too. So that's sort of a finance and IT planning phase, and a pretty important one. The next one is as critical, which is really your vendors and partners. And so we talked about your advisors. Now you have to go through your vendors and partners. And this is almost like a typical vendor selection and contracting process. but you don't want to run it with sort of the typical procurement organization. You really want to run it with your leadership. Deciding who your brokers are, who your custodians may be, what funds you want to work with, what banks you want to work with. Your advisors can help here, but this is a very personal decision. And in doing so, there are a lot of considerations, not just reputation of the firms, longevity of the firms. Jeremy talked about insurance considerations, but their trading platform, how easy is the technology to use? Those are just a few. Jeremy led our vendor selection process. You want to talk about some of the other key considerations?
Yeah, so, there are a number of considerations as Fong's outlined, but I'll highlight just a few that I think are really essential in the process. First, you need to consider the capabilities of the service provider, and you want to make sure that they offer the services that you need, or they align with your strategy. And whatever combination of those service providers you select, you'll want to make sure that it fits your strategy. You want to determine if the service providers offer trading services, and if they're a part of an exchange for kind of the ease of transacting. Does the service provider also provide custody services? And are they providing kind of an institutional grade offline storage and key management product with reliable controls? Does the service provider offer a trading desk so you can contact them to execute trades on your behalf and just bringing them to you for settlement? You may want to also consider additional services such as lending, staking, other ancillary services that might be of interest to you in the future. And you should take the time to understand what each provider offers and ensure that you select one that fits your strategy. Second factor is price. Usually there's a trading fee to transact, which means buying and selling. And in this world, it's making and taking is the lingo. But if you're paying 20 basis points per transaction, you're paying 40 basis points in total, because you're going to buy and you're going to sell at some point. So in addition to the transaction fee, you're going to be paying for custody services, typically in the form of an annual fee on your assets under management. You also want to address specifics with each service provider to make sure there aren't hidden fees. And my advice would be to negotiate pretty aggressively on pricing. Institutional investors are just starting to enter this market, and there's a significant room for savings on these fees. Third consideration would be around security capabilities, right? Get to know the security protocols for each provider. Do they have multi-factor authentication when you're signing into accounts? Are they able to support multi-approver protocols for transactions so one person can't unilaterally approve everything from funding to cashing out, for example? Does the service provider have their SOC 1, Type 1, and 2 certifications so that they can demonstrate for your audit team that they have controls and for data management, and that those controls are actually effective? These will be very important when you're working with your auditors to validate your internal controls. And I think the last thing that I'd mention is, insurance. I talked a little bit about this before, and I won't dwell on it now, but you should definitely focus on that as part of your strategy.
All right, Jeremy Price giving advice on pushing your vendors hard on price. It's an important point here. If you're a major corporation who's looking to invest in Bitcoin, you're still early in the game. All of the vendors you'll hear from tomorrow want you as a customer, and going early means you're sort of trailblazing, but it also means that you have the ability to find the perfect partner and ask for the right pricing. And when you find that right partner, it's really just a great relationship going forward, which we've had the good fortune of having with all the partners that we work with. Okay, so we've completed this planning phase. There's really a couple of things you want to do now. You want to update your project roadmap, key timelines, action zoners. As you're going to get into the execution phase, things start moving pretty quickly. And this is a good time that we found to have a board meeting, one formal board meeting, to lay out all the research that was done, to talk about, how you may want to invest in Bitcoin. You may not need formal board resolutions at this point, but you really want to have a robust, lengthy board discussion on all the work and why you're moving in this direction, why the strategy, what the execution plan looks like, and get their support to continue to move forward with really then what we'll get into next is the execution phase. And, I sort of split this into two parts. It's just there's a lot of things to happen here, but this is the fun part. You just sort of go one by one and go through each of these pieces. First, prepare your treasury policy. right? And we have a sample of what our Treasury Reserve policy is that we've open sourced. But what do you want to talk about here? You know, first of all, assuming you already have some sort of a Treasury policy, this could be an addition to it or amendment to it, but you want to talk about, all right, so how much can the company invest in Bitcoin? Through what means? What are the transaction procedures? What are the prohibited activities? Buy and hold, active trading, hedging, you know, what are your brokerage and custodial arrangements? You want to get that all right in a very robust Treasury policy, because this is the policy by which you will start executing your strategic moves on a go-forward basis. Second is your trading policy. The difference here is each trade will be governed by this policy, right? You know, what are your non-trading periods, right? Like to prevent potential conflicts of interest. Who can trade, right? You know, in our cases, you know, we have a short list of people who can move money from our bank accounts to our exchange accounts. Short list of people who can move money from our exchange accounts to our custodial accounts and back and forth. And like you do it with your bank policies, you typically have 3 or 4 people who can do it, and you need at least 2 people authorizing some of those movements. Those are the kinds of things you want to put in your trading policy. And similarly, as you identify people who are officers, directors, et cetera, who might already hold Bitcoin, you want to make sure that you don't have any conflicts of interest. You may want to have closed periods, just like when you're trading your own publicly traded stock, you're going to want to have closed periods for trading Bitcoin too. So having a very robust trading policy and a Treasury Reserve policy, once you put those things together, the execution then beyond this can be quite seamless. But thinking that through thoroughly is quite important. Of course, then you want to negotiate your brokerage and custodial agreements. Jeremy talked about the pricing, making sure you get that right, levels of service, types of trade. Can you pick up the phone and call somebody at any hour of the day, right? Bitcoin is extraordinarily a 24/7 network. You could trade any hour of the day. Can your broker support that, right? And is that live? Is it through a electronic feed? How do you make pricing decisions? Those are all the types of things that you want to put in there. What are the limitations? How much can you trade per day? How much can you withdraw per day? Those are all things that you want to have in there. Who are the points of contact within your organization, within your brokerage organization? So these are things that I think are more precedented when you think about traditional securities trading. When you talk about Bitcoin trading, there are less precedents in the institutional world, and you want to make sure you get all those things right up front. And then you want to set up the accounts, your brokerage account, your custodial account, your fund accounts. And that is an important step too. It's not as simple as, well, setting up a bank account is actually quite complex for a corporation. So it's a little more simple than that, but there's a lot about, you know, how do you transact? Jeremy, you want to go through some of those details for us?
Yeah, sure. In terms of transacting, right? I mean, you know, it's really important that you get feedback from your experts on what to expect, right? And how things are going to be done. We couldn't have acted as quickly and with as much conviction or as efficiently as we did without our experts and our partners. You need to consider how and who will execute the process of carrying out the Bitcoin strategy, right? You need to find reliable, accessible employees that you trust that need to be part of the process. I think third, you know, you need to focus on the segregation of duties and controls and how you're going to execute on all of your transacting and the management of the assets. And I think from a controls perspective, it's extremely important. And then, you know, we realized early on that one thing we thought was, or that in retrospect, we think is really important is using a trading desk to execute, especially since we had limited experience executing crypto trades. I'd highly recommend that type of service for institutions contemplating acquiring Bitcoin in any significant quantity.
Awesome. And then you want to decide internally who's going to be responsible for transacting, make sure they're fully trained on the platform. You know, do some test transactions, make sure you actually know how this works so that, you know, your first big trade, whatever it is, $1 million, $10 million, $20 million, isn't the first time, right? And it's a lot of fun, but you just want to make sure everyone knows exactly what they're getting into here. And then the last big document is the accounting memo. How are you going to account for this, right? And we'll go through this in nitty-gritty detail in a couple in about an hour and a half or so. So I won't go into that too far. You have our accounting memo or version of it out on our website. But think about it, there's 3 big documents, right, that you need to make sure are in place and well thought through. Treasury reserve policy, trading policy, and accounting memo. A lot of work here, but it'll be very satisfying, gratifying work because it really lays the groundwork for how to think about this as a corporation on a go-forward basis. Next set of items, execution phase, part 2. I talked earlier about IT and systems. Make sure you have the right defenses, changes in place. Make sure that you have, you're ready for anything that might happen in terms of bad actors coming into the organization. You may already have some of these things in place. You just want to retest them, ramp them up, have monitoring in place too. And then you want to go obtain your insurance. Jeremy talked about this. Insurance via your custodian, insurance via your fund, cybersecurity insurance, D&O insurance. Make sure that all those are all in the right place and everyone feels good about it. And then start putting together your SEC disclosures, right? And there could be quite a few, right? Depending on the materiality of the decision that you're about to make. 8Ks, 10Qs, 10Ks, etc. These are all things that you want to work through and think through. And they'll follow in large part some of the things that you've done in your accounting memo too. And then your communication strategy, right? We talked about investor relations, but also employee communications. Your employees may wonder, okay, so what exactly are you doing? Why are you doing it? For those who are less well-versed in Bitcoin and whose knowledge might be, circa 2008, they'll ask questions, about sort of the more seedy side of historically cryptocurrencies, and you want to be proactive. One thing we did is some of the education documents that we made available on our website, we made that not just available for all you, but available for our employees too, right? And so getting employees well-versed in what Bitcoin means and cryptocurrency means. And typically, just like with our stakeholders, employees spend a couple of hours on this and become fascinated and very interested, and they're like, this makes complete sense. Investor relations we talked about, and then public relations, right? What proactive communication channels do you want to use? What I love about this part of the world, when you get into cryptocurrency, into Bitcoin, the public relations channels are quite modern, right? Think Twitter, think YouTube, think Medium, and things like that, blogs. And so you don't have to rely on, print communications. You don't have to rely on your traditional PR firms who may actually not be very familiar with the space and know what to do. Here you can use ingenuity, creativity, and start to modernize the image of your company, not just in how it invests, from a treasury side, but also how you communicate out to all the different constituents. And you can really play around with this and have a lot of fun, especially on Twitter. So good things that can happen as you think through your communication strategy. And then you prepare for your big board meeting where approvals are going to be made, right? Associated committee meeting documents, resolutions, conduct the board meeting, go through investment committee, audit committee meetings, approve the treasury reserve policy or the treasury policy, approve the BTC trading policy, approve the accounting policy, usually through an audit committee, approve and agree on brokers, custodians, clear any conflicts of interest. Once you've gotten through this execution phase, this is a big one, but once those approvals are done, you're sort of off and running and ready to go and start to talk about your initial foray into Bitcoin. And that's really then you get into the post-execution phase, right? So once you've done it once, how often are you going to do it? What's the timing? What's the frequency? Making sure you have a nice treasury plan in place for subsequent Bitcoin purchases. What do you do as a communication basis going forward? And then you start to trade. And after 6 months of having done this, couldn't be more thrilled that we did, and couldn't be more thrilled to share with all of you our playbook. So with that said, any closing remarks, Jeremy? Lessons learned, ahas from your experience through this process, other than you got to know me way too well?
I already knew you way too well enough. Okay, so yeah, I think there are a couple. So for me, first point would be, don't go it alone, right? We started our journey knowing very little. We learned quite a bit, but we learned even more with the experts that we brought in to consult with us. And I think that the knowledge we gained from each other just not the one-way communication, but the knowledge that we gained and that we gave to our experts even, we all learned, and it was an invaluable experience for both parties, and created kind of a community. It starts to feel a little bit more like a community as we went through the process. I think that, you know, as far as adapting and adjusting to the needs and improving our policies, like we worked very well together. I think it was very important for us to get it right, to have that ecosystem. I think also we learned that, you know, the Bitcoin investment community is pretty tech savvy, pretty modern, and it's a great fit for MicroStrategy. You know, in 2020, MicroStrategy rode the virtual wave, shifting, you know, our digital marketing and sales efforts or to a digital marketing and sales platform. We took advantage of online collaboration and work tools, you know, working remote in a forum just like this. And we adopted a digital asset class as our primary treasury reserve asset. I think all of those things have helped the company tremendously, improving margins and value for shareholders. And I think the investment community sees that and has responded to that. And it's not something we necessarily were sure everybody was going to respond to. We thought that they would, and we were very pleased that we did. So, you know, my advice for other corporations would also be that this is a journey, and you need to set your course and put your plan together, but you need to be agile enough to adapt and change course throughout. It's not easy to make that initial leap, but if you put the work in, hopefully with some of the information that we're providing and examples we're sharing and the growing ecosystem here, it gets a lot easier to start and complete the journey. And I think what I'd say is that the key to it all is really just getting started.
Thank you, Jeremy, and thank you for the time. And let me build on a couple of your lessons learned first. And this builds on what Ross and Mike also said. If you believe your company is going through a digital transformation, and as I said, as I kicked off MicroStrategy World, you need to, because that will be what differentiates you against your competition. And your digital transformation has really just started with your P&L strategy and your products and your services. That's part one. Every company, every major corporation at this point in time also needs to digitally transform your balance sheet and your treasury policies. And Bitcoin is the way to do that. It is not something that comes immediately to mind for every corporation, but when you take the time to do the research, to understand the macroeconomic impacts, the digital impacts, the global impacts, et cetera, it is very much, you're either sort of immediately get it or you gradually get it. And as people gradually get it, a light bulb goes off and they suddenly get it. And then you dive in and it's a great thrill. It brings great value to your organization, to your employees, to your shareholders, to your stakeholders, and to your customers. And it's something that everyone should be considering and then very quickly doing. And thank you for all your time. We'll be back in a little bit at the top of the hour to talk about the legal considerations. And trust me, you know, you may say, oh, legal considerations, this isn't going to be fun. It's thrilling, it's enthralling, and it's more you ever want to know than you'll ever want to know about Bitcoin legal considerations, but it'll be highly entertaining. Thank you, everyone.
Окей, виждаме, че доста, как да кажа, прагматично се отнасят към нещата. Директно скачат на дълбокото, директно почват да обясняват. Добре, щом сте тази конференция, значи най-вероятно така или иначе сериозно се замислите да инвестирате парите в биткоин. И да, и просто минават доста неща, просто изговорах, аз не можах да ги запомня всичките. Но минаха и през security, как, нали, вика пентестнете си нещата, подгответе се за фишинг атаки, impersonating, някой се представи, че е някой от компанията, като се свързва там с кастодиан си, не знам си какво. Общо им обяснява, че нещата ще станат доста по-сериозни, защото като банкираш там в някаква банка и нали, само ти имаш достъп до банката, до парите от банката. А пък в същото време, нали, с биткоин знаем, няма такива неща да се свържеш да кажеш, ало биткоин, нали? Тук една транзакция стана, стали да я върнем. Няма такива неща. На когото е изпратена, той е в контрол вече. Така че да, доста прагматично, доста сериозно отношение. Но ми прави впечатление, там CFO, CEO, CTO, всякакви са ги наредили от тяхната компания. Буквално целият екип, а не е само Майкъл. Целият му екип е такова. Целият екип на MicroStrategy е част от този проект, от този стрим. Видим какво ще стане с следващите презентации. Интересно, ще видим ли това утре може би ще бъде. Гостите, така да ги нарека. The Honorable Guests. Големите клечки от компаниите в криптоспейса.
Hello, and welcome to the legal session of the Bitcoin for Corporations Summit. My name is Ming Xiao, and I'm the General Counsel of MicroStrategy. So from the other sessions, you learned why more corporations and institutional investors are adopting Bitcoin. And then you saw a little bit of what a general corporate playbook looks like for integrating Bitcoin into a Treasury Reserve strategy. In this session, we're going to share with you the main legal lessons that we at MicroStrategy learned in our Bitcoin initiative with the goal of demystifying some of the most important legal aspects, and then showing how, from a legal perspective, all these things come together to support a successful corporate Bitcoin project. Now, I know that when some people hear the word legal, they think that things are going to get technical or perhaps very specialized and hard to understand. Please don't change the channel. We have made the presentation and discussion format geared for non-lawyers. And I think that's actually very important. As Fong and Jeremy were touching on in their last presentation, we found that implementing a Bitcoin corporate strategy really does require a lot of good collaboration among different individuals and teams, especially the finance, legal, internal controls teams, the board of directors, our senior-most executives, external advisors, and other constituents in the organization. And so we want to be sure to promote cross-functional learning that we think is useful for pretty much any corporate Bitcoin project. Speaking of collaboration and advisors, joining me in this session are three other panelists. All of us worked very closely together on the legal matters for MicroStrategy's Bitcoin initiative. They're going to introduce themselves, starting with my colleague, Una Green. Una?
Thanks, Ming. Happy to be here. I'm Assistant General Counsel at MicroStrategy, and I work very closely with Ming on corporate governance and securities matters. I helped Ming with our Bitcoin initiative pretty much from the beginning and worked on the legal aspects of the initiative in one way or another.
Next up is Dax Hansen. We didn't work actually with Dax before we embarked on our Bitcoin initiative, but I'm sure glad we found him since he helped us navigate a lot of the regulatory considerations. Dax?
Thanks, Ming. My name is Dax Hansen. I'm a partner with Perkins Coie, where I chair the firm's blockchain and fintech practices. And today I'll be focused on the unique regulatory and technology aspects of Bitcoin that are relevant to a Bitcoin investment strategy.
Okay, our last panelist is Tom Ward. He's our longstanding outside corporate and securities counsel who helped us transition as a publicly traded company from our pre-Bitcoin era, so to speak, to our post-Bitcoin era. Tom?
Thanks, Ming. I'm Tom Ward. I'm a partner in the corporate practice group here at WilmerHale. And I'll be focusing today on corporate governance, securities regulation, disclosure, and some policy and procedures aspects.
Great. Go ahead, Tom.
We'll find that all of these aspects work together. What I've talked about, what Dax talked about, Una and Ming, but I don't think people will find it ultimately to be overwhelming.
Terrific. So what exactly are the legal lessons we're going to be talking about? Here are the 5 that we think may be the most useful to other corporations that are starting to consider adding Bitcoin into their treasury. You can read them here, and we'll go through each one of them. Before going any further, though, I did want to make one more plug for the documents that we have open sourced. Fong mentioned them in the last session. We've published about 7 documents, and we'll be discussing some of them here. You don't have to refer to them on the website, but we did want to make sure to reference them again so people can know to go look for them afterwards. All right, so with that, let's go ahead and start with lesson number 1. Actually, let me show a picture of the documents that we have up on our website. There they are. And we will move to lesson number 1. What you do with Bitcoin will drive the regulatory issues. As it turns out, what you do with Bitcoin precisely can make a huge difference in the regulations that apply. Dax, you're a seasoned lawyer when it comes to the regulatory landscape that applies to cryptocurrencies and especially Bitcoin. Can you give people an idea of the main areas of regulation? I think it's a good starting point other than the securities laws, which we'll talk to Tom about in a minute or so.
Absolutely. So there are three core regulatory areas that a company needs to consider with the Bitcoin strategy. And the first are the federal and state money services business laws, such as those that are administered by FinCEN. Money services business laws prevent money laundering and terrorist financing, and they impose reporting and licensing and examination requirements on non-bank financial institutions. A company that's merely investing in Bitcoin usually isn't going to trip up against these money services business laws directly unless that company expands the scope of their activities to include things like wallet or exchange services. The second area that's relevant on the regulatory side are the federal sanctions laws, such as those that are enforced by OFAC. And sanctions laws really protect us by requiring that all US persons avoid dealing with the enemy, such as criminals and terrorists on certain government lists, or by dealing with certain embargoed countries. Sanctions laws are relevant to someone who's investing in Bitcoin because Bitcoin is an international digital currency network, and it will be important for a company to vet its counterparties against those government lists. Third, commodities laws, such as those that are administered by the CFTC, impose requirements and restrictions related to trading and other aspects of contracts that derive their value from an underlying asset, such as futures contracts and swap contracts that might be tied, for instance, to things like barrels of oil. And a company that's investing in Bitcoin that may wish to hedge the volatility of the Bitcoin price may want to work with derivatives to hedge that risk, and if so, would need to take a close look at commodities laws.
Thanks, Dak. So it seems clear that many laws can apply to Bitcoin activities. So for example, if you're a Bitcoin exchange or you provide Bitcoin custodial services, there are special laws that you need to comply with or licenses that you need to get at the federal or state level. But let's focus here on the upshot for our purposes. Can you explain why a strategy of merely buying and holding Bitcoin as a treasury reserve asset doesn't need to drag in a lot of those laws as a practical matter?
Sure. Yeah, I think there's really two reasons. The first is that investment in Bitcoin is not the type of activity that these laws were intended to regulate. Conversely, a company that's investing in Bitcoin is actually the type of entity that these laws were designed to protect, for instance, in its dealings with custodians and brokers.
Great. So I think what that means is the laws are still there in the background. And in fact, a lot of those laws need to be complied with by the vendors, right, that one uses. If you're the corporation that's just buying and holding Bitcoin, your vendors, in many cases, are going to need to pay attention to those laws. But let's pause there on those particular laws. And then let's talk a little bit about securities, and we'll come back and wrap things up in a moment. Tom, you're a securities lawyer. And I think it's a really important question or issue that we need to get on the table right at the beginning, which is Bitcoin isn't considered a security. And it's a really, really important significant fact, because it means a lot of the SEC regulations that would apply if Bitcoin were a security just aren't going to apply. And this is particularly important for publicly traded companies, because obviously publicly traded companies have to pay a lot of attention to the securities laws. Can you explain why Bitcoin isn't a security?
Sure, Ming. Let me go through it a little. Everyone knows that stocks, bonds, options, and the like are securities. And by contrast, cash like dollars or gold aren't. The current SEC test basically says there's a security created when there's investment of money in a common enterprise with an expectation of profit derived from the efforts of others. So using this test, actually, the SEC has taken the view that some digital coins are in fact securities, mostly because they represent passive investments that require a promoter to build out a network and make the enterprise connected to that coin successful. Bitcoin's a little bit different though. The SEC's view is that that network is currently sufficiently decentralized. Purchasers no longer expect any person or group to be carrying on managerial or entrepreneurial functions. And so that doesn't really fit within the test for security. And so if you have no central third party whose efforts are determining the enterprise and the network on which it functions operationally, there really isn't a reason to apply the disclosure regime of federal securities laws to Bitcoin. And so senior SEC officials have said that they're of the view that under the SEC's current test, Bitcoin does not constitute security. And in that way, Bitcoin in some ways is quite different from other things that you see in initial coin offerings.
So Bitcoin's not a security. What does it mean about, whether a company like MicroStrategy that has acquired and holds Bitcoin becomes an investment company?
Yeah, man, I'm glad to clarify this, because I know you get this question quite a bit from folks. Hey, we hold Bitcoin. Why isn't there an investment company act issue? And the answer to that is that the statutory definition of an investment company depends on a company either holding a specific percentage of securities or holding itself out as an entity that primarily invests, reinvests, or trades in securities. So the fact that Bitcoin isn't a security for SEC purposes basically means it's outside the purview of the Investment Company Act. And so that's why MicroStrategy isn't an investment company.
Now, similarly, we get the question often whether MicroStrategy has become an ETF because we hold as much Bitcoin as we do. Can you explain also why we're not an ETF? This is an important point to underscore as well.
Sure. ETF, as everyone knows, stands for Exchange Traded Fund. And Exchange Traded Funds are registered investment companies that invest in securities and then their interests in turn trade on markets. MicroStrategy is not an ETF in part because we're simply just not a registered investment company, basically because of that issue of Bitcoin not being a security. In addition, ETFs are structured sort of completely differently from MicroStrategy Corporation. ETFs have arrangements with financial institutions to keep their market price and net asset values close to each other by having the institution engage in arbitrage by either redeeming shares directly to the ETF in exchange for the underlying assets or by purchasing shares in the ETF. MicroStrategy has none of those arrangements. No shareholder is entitled to exchange MicroStrategy shares for any of its underlying assets. So in short, no, MicroStrategy is simply not an ETF.
Okay, so to recap, Bitcoin is not a security for securities law purposes. MicroStrategy hasn't become an investment company because of the Bitcoin that we've acquired and hold. We're also not an ETF. Let's just change the hypo a little bit. What if a company like MicroStrategy wanted to invest indirectly in Bitcoin? So not directly invest and hold it, but buy, say, shares in a Bitcoin fund. Does that change the analysis at all?
So I mean, absolutely it does. As Dax was saying earlier, how you exactly deal with Bitcoin really affects the regulatory regime involved, and that applies on the security side as well. If you invest indirectly in Bitcoin through a fund, for example, now you're within that SEC definition of a security because you don't hold the Bitcoin, you own fund shares, and those fund shares are going to be deriving their value in part from the actions of the fund manager. So in that case, the company, those would be considered securities, and the company would then have to start looking at those Investment Company Act thresholds as to what amount of securities the company can hold before it becomes an investment company. Now, there may be ways to structure fund investments to avoid tripping those thresholds, but those get very complicated and maybe beyond the scope of this presentation.
Okay. So we just did a very, very quick tour of a number of different areas of the law that can apply to a company's interaction with Bitcoin. But there's a key takeaway here, and I want to mention this as we wrap up this first lesson. And that is that for an operating company like MicroStrategy, merely buying and holding Bitcoin directly for treasury purposes means many regulations like the money services business laws, commodity regulations, assuming you're not hedging or engaging in Bitcoin derivatives, and the Investment Company Act, et cetera, they just generally aren't going to apply directly to a corporation like MicroStrategy. And that really was an important point for us because it meant that investing in Bitcoin turned out not to be as daunting from a regulatory standpoint as we thought it might be. Now, if your business wants to do something more or different with Bitcoin, like what a PayPal or a Square or Coinbase does, then other regulatory considerations would definitely come into play. But for just buying and holding Bitcoin directly for treasury purposes, the regulatory demands are actually much more limited. Still things to consider, but very manageable. All right, so let's wrap up the first lesson and let's head over to lesson number 2. Yuna, do you want to kick us off on this one?
Sure. So we picked corporate governance as one of the key points we're covering today because it's very important for publicly traded companies like MicroStrategy. It's about making sure that our board of directors and our executive officers are satisfying their fiduciary duties to the business. And it really shapes views on things such as what sort of due diligence is advisable, how policies and procedures should work, and internal controls. And in many ways, corporate governance serves as the backdrop to all of the other points that we're discussing in this session. And I really think this is all the more important when it comes to Bitcoin, because just as Tom and Dax were explaining, Bitcoin is not a conventional asset like stocks or bonds. And as evidence of that, when we checked which investments the company was authorized to make, we weren't surprised at all to find that Bitcoin and other digital assets were not specifically authorized. So we knew from the get-go that we need to get approval from our board for MicroStrategy to invest in Bitcoin, especially at any significant levels.
Now, I guess because of that, you might remember one of the first things that we did to support corporate governance was to have our executive team, as well as our board, spend a lot of time at the beginning just getting educated about Bitcoin. And Fong and Jeremy made reference to that in their presentation. And then also understanding why it could be an asset that we'd want to invest in and what considerations are implicated. Here we get to one of the documents that we posted publicly. If you go to our website, you'll see a document called Key Considerations for Corporate Investment in Bitcoin. This document lists out many of the important areas of learning that we studied up on as we consider our Bitcoin initiative. And I would encourage everybody there to go look at that document since we're not going to have time to to consider all of those things here in this session. Dax and Tom, as experts in your field, we were very fortunate to have you help us get up to speed. Can you highlight for everyone some of the more important considerations for boards to get familiar with as they consider investing in Bitcoin to support corporate governance?
Absolutely. So from a technology perspective, Bitcoin really is novel. It's not backed by anyone. It's an asset that's tracked on an open source ledger that everyone can see and have access to, but no one controls. Transactions can't be reversed. By design, there's only 21 million Bitcoin that can ever exist, and they'll be introduced at a certain fixed supply. There's 24/7 trading that you heard about earlier in these sessions, which is different from traditional markets. And Bitcoins really are not coins at all in a tangible sense. They are ledger entries that are managed through public and private keys. And so if you lose your key, you lose your Bitcoin. So that brings us to the second point, which is custodial arrangements, that given the high stakes of safeguarding and preserving your assets, it's important to make smart decisions about how you will custody the Bitcoin and which custodians you'll use, and also the different internal policies for engaging with those custodians.
So, the market for Bitcoin is pretty unique. I mean, it's 24/7. It's very different from stocks and bonds. I think it's worth talking a little bit more about the market factors, which will then play into some of our SEC disclosures, which we'll talk about later. Tom, can you comment on that?
Yeah, and look, market factors are going to be very important in making the decision to invest in Bitcoin, and the board and management is going to have to look at those. In particular, two are quite unique to Bitcoin. One, unsurprising to the audience, is volatility is a fact of life and very significant in the Bitcoin market. volatility will have a significant impact on accounting and then disclosure as a result, which we'll discuss a little bit later in the presentation. Secondly, liquidity is often an issue that is raised in the Bitcoin market. Although with the increased size of the market, liquidity has significantly improved recently. So what liquidity would look like in a panic situation remains something of an unknown. MicroStrategy, for example, took the view that it was going to hold the cash necessary for day-to-day operations of its business in traditional cash investments to reduce any requirement to have to find immediate liquidity in the Bitcoin market, even as the Bitcoin market liquidity improves.
I want to follow up specifically on fiduciary duties since they make up the legal framework for corporate governance. Tom, can you please explain briefly what fiduciary duties are relevant and how companies can go about satisfying them, especially in the context of investing in Bitcoin?
Sure. There are really two key fiduciary duties that boards need to be aware of in determining to invest in Bitcoin. The first one is a duty of care and the need to get informed. Duty of care requires that boards become informed after deliberative decision-making that's based on all the material information that's reasonably available to them. So this is going to be thoughtful. And as a practical matter, look, board members are going to have to do some homework here on Bitcoin. It's an emerging technology in an emerging market. This is not time for investors, for directors to be passive and sit as a bump on the line. They need to look closely and clearly at all the benefits and risks and understand potential losses, accounting issues, regulatory uncertainty, and the like. And a key part of that is going to be that board members are entitled to rely on outside experts. And then when MicroStrategy was looking at this, you brought in a number of outside experts on Bitcoin to talk to the board about this, right?
Yeah, that's right. I mean, obviously we had yourself and Dax, but we also consulted other experts. And I think getting information directly from experts was very helpful to us in our due diligence. What about the other fiduciary?
Yeah, the second fiduciary duty is duty of loyalty and potential conflicts of interest. And the duty of loyalty requires that fiduciaries act or decide not to act in a disinterested manner on an independent basis in good faith with an honest belief that the actions in the best interest of the company. That raises the issue of potential conflicts. You'll want to be mindful of any potential conflict of interest you normally have with any company activity. If someone has an interest in a potential broker or custodian you want to use. But the more difficult, maybe Bitcoin specific issue relates to trading of Bitcoin by individuals. It creates the problems of inside information, front running, and the like, and requires a specific Bitcoin trading policy, which we'll discuss further here when we talk about some of the policies and procedures that MicroStrategy's incorporated.
Before we leave the topic of boards, Dax, I'm sure you've advised a lot of boards in the cryptocurrency and the Bitcoin space. Do you have any thoughts you want to add to how to get boards up to speed and how it all comes together for a board decision?
I'll just add one thought, which is that this is a very complex area with lots of moving parts and pieces. And this is an area where I think lawyers can be very helpful. The in-house lawyers and outside advisors to just parse through the various interrelated legal considerations and to help the board and the business make good decisions and to organize the process and the documentation well.
So I think, the key takeaway from this lesson is that corporate governance is really the backdrop for pretty much everything that one does to help, execute on a Bitcoin strategy. And so you really have to think about governance from the beginning, especially if you're a publicly traded company. It'll also help you get through your board and your governance processes a lot more smoothly if you think about it from the beginning. So that wraps up lesson number 2, and we'll move on to lesson number 3. Policies and procedures are your friends. Una, I think you wanted to kick that one off as well.
Yep. So given the regulatory and corporate governance considerations we just talked about, it's not surprising that our third key legal area to discuss is policies and procedures. So policies and procedures effectively act as the guardrails for the company to invest in Bitcoin. Dax, you helped us a lot in formulating policies and procedures for our investment in Bitcoin. Since most other companies out there thinking about investing in Bitcoin are probably in a position similar to what MicroStrategy was in, as in little to no prior experience with Bitcoin. Based on your experience with us, what's your advice to them about how to think about policies and procedures in this context?
Well, from a big picture perspective, I'd say it's important, first of all, just to define clearly the scope of activities and really the investment thesis of a company, to know what you want to do. And that's going to inform really the focus of the policies and procedures that you put in place. Recognize that this is a rapidly evolving area where the legal landscape changes on us frequently. So we need to be nimble and dynamic, like bamboo blowing in the wind. And then to implement guardrails that are tailored to the company's specific objectives on the investment side, calibrated to their organizational and governance structure, their regulatory profile, and those of their selected partners like the custodians and brokers, and also the company's risk appetite on different issues. And just recognize that no two companies are going to be the same, and there will be opportunities to iterate. And then lastly, I guess I would say it's important to look around for best practices and find good advisors. And I think that this conference and the documentations posted will go a long way in that regard.
And I know internal controls is another important area of focus worth flagging, especially for publicly traded companies. Tom, can you comment on this?
Yeah, so policies and procedures are going to be important, and they're going to have to be written down because auditors are going to audit a company's internal controls under Sarbanes-Oxley Section 404. So they're going to look closely at your control environment and how you are purchasing and holding any Bitcoin investments that you make.
Well, with that background on policies and procedures generally and their importance, let's talk about a concrete policy, and that's our Treasury Reserve Policy that we developed for our investment in Bitcoin. It's also one of the documents that we've shared publicly for people to view. I guess both Dax and Tom, when we developed our policy, you helped us identify areas that we should consider including in the Treasury Reserve Policy. Can you touch on some of the sort of more important considerations for that Treasury Reserve Policy that are maybe more Bitcoin specific?
Sure. Well, from my perspective, one of the first items to consider are your people issues. Who's going to be making the decisions and the strategies, who will be implementing those strategies, who might be providing some sort of oversight and controls for those decisions, and how will all your people work together to both meet sort of the need for speed, but also to keep good controls in place.
Right. What about, policies and procedures around how much money a corporation can and should put into, say, Bitcoin versus keeping in cash? I think that was an important issue that we discussed a lot internally. Tom, can you comment on that?
Yeah, no, that's right, Ming. MicroStrategy is taking the view that it wants to hold cash for day-to-day needs of the business, and that allows it to mitigate those liquidity risks we were talking about earlier in Bitcoin. So the board looked at different scenarios and determined what was going to be needed for working capital, as well as how cash reserves might be deployed for ongoing business requirements. This is an example, as Dax said earlier, no companies are the same. It's going to vary from company to company, and you need to take into account what your expected cash flows from your business operations are, any seasonality needs, for example, any short-term business plans as an acquisition in the works, et cetera. So those are the kind of things you want to look at in terms of identifying these thresholds for working capital and cash.
You know, the other interesting area of internal discussion when it came to the Treasury Reserve Policy was the focus on service providers. And we're going to be talking more about your service providers that are needed for a Bitcoin Treasury Reserve strategy. But Dax, this was new to us, kind of sort of embedding it into the Treasury Reserve Policy. Can you talk a little about why that's important?
Sure. I mean, a custodian and also brokers are going to just be critical to your success or failure. And so it's important in the policy to pre-vet them and to understand what those terms of engagement might be. So, develop effective processes in advance for vetting and contracting with, engaging, and for ongoing monitoring of your custodians and brokers.
Same thing with prohibited activities, Dax. That was another area that we had focused on. Some specific importance here relating to Bitcoin. Can you just comment very briefly on that?
Sure. So you don't want to step into a bear trap unintentionally, or inadvertently. And so it's important to think through in advance the scope of activities you'll be engaged in with your investment thesis, so that you don't inadvertently become, for instance, an exchanger under the money services businesses laws. And it's also important to make sure you have safeguards in place for protecting the safety of your people and for protecting your assets from some security and other breaches.
Great. We mentioned that we've published our Treasury Reserve policy, and we do hope it's helpful. But I think as somebody mentioned, there's not going to be a one-size-fits-all Treasury Reserve policy. Different companies can and often will have different control processes and risk management objectives and techniques. But hopefully you can take a look at our Treasury Reserve policy for some of the basic areas that we think are most important, at least in our case. Let's move on to one more concrete policy, which was referenced earlier, which is our Bitcoin trading policy. This is another one of the policies that's a little more legal oriented that we thought would be helpful to talk about. Tom, this was an interesting policy for us to work through because there were some parallels to another policy we have, which a lot of publicly traded companies have, which is the insider trading policy relating to company stock. And yet it had a few different wrinkles to it. Can you explain why that's the case?
Yeah, Meg, a Bitcoin trading policy is needed really because there's two things out there that really impact trading. One is fiduciary duties that we talked about earlier, where an insider might take a trading opportunity without offering it to the company first, and where a conflict of interest might arise where an insider engages in front running or manipulation to the detriment of the company. The second item is commodities laws, which broadly parallel Rule 10b-5 under the Securities Act and prohibit manipulative and deceptive devices and trading on the basis of material non-public information and trading on the basis of information that's been obtained through fraud or deception.
Right. So as a result of those things, we put provisions into our Bitcoin trading policy that sound pretty familiar in the context of insider trading policies, like non-trading periods to help prevent potential conflicts of interest between individual personal transactions and company transactions in Bitcoin. We've got provisions that talk about no trading on material non-public information relating to our company's Bitcoin activities. And then you've got prohibitions around front-running company transactions and other things that might constitute market manipulation, et cetera. I think the key takeaway as we wrap up lesson number 3 is that policies and procedures can be really helpful in keeping the corporation in the lane that the corporation wants to be in and avoiding unwanted problems down the road. Now, we just focused on 2 of the more legal-oriented policies. There are other policies that are important that pertain to things like accounting, internal controls, and the like, which our finance colleagues will be talking about in the next session. So you can look forward to that. So that wraps up lesson number 3. And let's move to lesson number 4. Carefully review and select vendors. This lesson is a great example of the cross-functional collaboration that we were talking about earlier and why it's so important. In some other contexts, the topic of vendors might be somewhat bland and not sort of rise to the level of importance that it has here. But it's actually really essential in the context of Bitcoin because you need it for good risk management, given some of the characteristics of Bitcoin. And the vendors that you're likely to use aren't going to be the same vendors that you've worked with before. And the issues are going to be somewhat different from the ones you've probably needed to deal with in investing in other assets like stocks or bonds. Now, the two most important vendors for a buy and hold strategy that MicroStrategy has are your custodians and your brokers, right? You need services to help you acquire your Bitcoin. And then you've got to have a service that's going to help you hold it if you're not going to hold it yourself. One of the great things about this summit is that you'll hear from some of the leading providers of these services in day 2 of this track. So please stay tuned. Now, as an initial matter, when it comes to vendors, you need to figure out what products and services you're going to want from your vendors. For example, if you not only want to buy Bitcoin, but you want to hedge it or enter into derivatives relating to it, then that's a service that one vendor might offer, but another one might not. So you do have to be very careful and not make assumptions about the scope of activities that these different vendors can have. Speaking of the scope of the activities, it reminds me of the first topic, which was the regulatory considerations, Dax. I know you ran through, with us, many of the things to consider in assessing custodians and brokers. Can you touch on why it's important to consider the regulatory profile of the vendors that you're considering?
Absolutely. I mean, the simple answer is because the regulatory profile of your brokers and custodians can have a dramatic impact on the safety of your investment. Consider the type of legal entity that your custodian, for instance, is. Are they a New York limited purpose trust company? Are they a federal OCC bank? What's the relative sophistication of the prudential regulators? What are the capital requirements and bonding requirements that those legal regimes impose on the licensees? Those will net out certain protections for the customers of those entities. It's also important to understand what sort of custody model your vendor uses. Are they a qualified custodian under the securities laws? Are they holding this as fiduciary? Is it a bailment? What are the bankruptcy protections and pass-through insurance protections that are afforded to you? Understanding the domestic protections versus international protections all have an impact. And there really is a fair amount of a variation in the regulatory profiles of the custodians and brokers out there.
Yeah, with that as background, there's a lot to consider. So let's now move to contractual considerations for engaging custodians and brokers. Since MicroStrategy, designated Bitcoin as our primary treasury reserve asset, making sure we had an appropriate custodian or custodians was always high on our list. And we knew that we needed brokers as well to help us acquire, our Bitcoin, to help others in negotiating things like, a custodial arrangement or a broker arrangement. We've made public a document that we've used to help identify the issues that we wanted to focus on, at least in the context of our custodian negotiations. And it's a document called the Contractual Considerations for Digital Asset Custodians, and it is published, and we encourage everybody to look there. Dax, can you touch on some of the more significant issues that companies would likely want to address in striking the contractual arrangements with custodians and brokers? I know there's a lot to cover, but maybe you can highlight a few.
Sure, absolutely. So I guess looking at your list, Ming, we hit briefly already on items 1 and 2 in terms of the regulatory profile of your partner. Item 3 is really critical for understanding how you're going to buy and sell the Bitcoin, and to understand and build into the contract the fact that timing really is of the essence, that prices can fluctuate dramatically, and that can be good and bad for the company. Items 5 and 6 really are sort of the heart and soul of a custodial program, which is really just aimed at keeping your Bitcoin safe, keeping it safeguarded, and make sure the security protocols think through things like hot wallets and cold wallets. And items 9 and 10 are really there to think through in advance in the contract what to do when things go wrong. What sort of insurance limits are available to you? Are you an additional insured? And what are the respective limitations of liability or indemnity obligations or disclaimers in the contract?
Well, clearly there's a lot to consider when thinking about vendors like custodians and brokers. And I think we also got that from the presentation by Fong and Jeremy, and there's not enough time to go through more of it. But I think the takeaway from this lesson is that the learning process that a corporation needs to go through with Bitcoin understanding Bitcoin extends very much to the vendors that would help you implement your Bitcoin corporate strategy. So you need to keep that in mind in your planning process. So that wraps up lesson number 4, and we're in the home stretch now to lesson number 5. Una, do you want to kick us off again for think through public disclosure?
Sure. And this is one of the lessons we're focusing on today because public disclosure is very important to publicly traded companies. We start with the basic principle that publicly traded companies have obligations to disclose material information in a timely way because investors need to consider that information to make informed decisions about buying or selling a company's stock. So to help illustrate some of the disclosure issues we had to think through, let's look at 2 examples. Our initial investment of $250 million in Bitcoin, and then the creation of our Treasury Reserve policy. Tom, could you comment a bit more about why these developments are considered material and therefore need to be disclosed?
Sure, to provide just a little bit of background, MicroStrategy held initially about $500 million of cash and cash equivalents. And when the board determined the company was going to do 2 things with that amount of cash, they were first going to do a Dutch auction self-tender offer for up to $250 million of common stock, and then authorized management to invest up to $250 million in Bitcoin. Both of those were material events, and the Bitcoin authorization, because it was so new, was material to the decision of stockholders whether or not to participate in the tender offer. So as a result, the company announced both of those actions simultaneously via press releases and Form 8K filings. At that point, the company is cash flow positive, and the question was now raised, well, what's going to happen with cash generated in excess of the business needs? So the board subsequently determined to adopt that Treasury Reserve policy we've been talking about. And so the new policy provides that Bitcoin was going to be the company's primary Treasury Reserve asset going forward. And as a result, additional cash was going to be invested in Bitcoin. So again, this is a material change from prior practice, and the company again made a disclosure on Form 8K relating to the adoption of that policy.
Now, people have probably noticed that MicroStrategy sometimes, we put out press releases or 8Ks announcing additional purchases of Bitcoin. And in some of those cases, those are voluntary disclosures by us because we've already disclosed our Treasury Reserve policy, for example. But given that Bitcoin is such a new asset class for corporations to invest in, we do think that it can be helpful for the public to know more about our Bitcoin investing, than we might legally need to provide. And so we do sometimes provide voluntary disclosures. Tom, we've just talked about public disclosure around investing in Bitcoin sort of generally, but there's a host of other public disclosure implications that come with investing in Bitcoin. Can you start to touch on those? I think this is where there's a lot of intersection between what we lawyers do and what our finance colleagues do. But I think it is important to start touching on it, and then our finance colleagues will build on some of this in the next slide.
Yeah. So I'll let the finance folks get into it more precisely what Bitcoin GAAP accounting is. But in short, it's very strange and creates a lot of interesting disclosure considerations. In short, Bitcoin's an intangible asset, treated as an intangible asset. And as an intangible asset, you account for it initially at cost. And then in future periods, you look at whether there's been any impairment. And if there's been an impairment, then you have to write the asset down on your balance sheet prior to any sale. You don't write it up. Gain is only recognized when a sale is actually accomplished. So as a result, each quarterly reporting period effectively looks at the lowest price that Bitcoin's ever traded at since its purchase and requires a write down. So what's important about this is people need to understand it's not mark to market, and it's not an impairment charge determined by the price at the end of the quarter, but instead it's marked to the lowest possible price and a corresponding impairment charge at any time during the quarter. So accountants like this approach because it's conservatism, which pervades GAAP accounting, but it will detach the carrying value of Bitcoin on the balance sheet from reality in terms of what the actual market value in the trading markets is of those Bitcoins.
So, with that accounting treatment, Tom, I think it also means that public companies have to then sort of build that into how they describe their business and how they expect it to perform in the future. Can you comment on that?
Yeah, that's right. As we said earlier, volatility is part of the game in dealing with Bitcoin. So there's going to be volatility in your reported earnings because of these impairment charges. And that's going to lead to the issue of people want to really understand what's going on in the business outside of these sort of odd gap impairment charges. So it's going to lead to a bunch of non-GAAP presentation issues. Non-GAAP presentation to basically be able to understand the underlying business and avoid the distortion by impairment charges is a matter of significant concern to the SEC. So it's important that any non-GAAP figures be reported in accordance with Reg G and item 10 of SK, and also they'll have to be clearly explained and reconciled to the most appropriate GAAP metric.
Now, no discussion around SEC filings is probably complete without some mention of the risk factors. And so, Tom, could you touch briefly on that?
Yeah, look, Bitcoin by its nature contains a number of significant risks, and risks beyond what investors may normally be accustomed to when thinking about investments held by the companies in treasury. So the risks need to be disclosed in the SEC filing so investors understand the risks, and they would be tailored to your particular business. But they're probably going to cover things like the regulatory risks we've talked about and related controls, volatility, and the lack of any supervised market in Bitcoin, the impact of that volatility on your own stock price, the risk of theft and loss that Dax played on earlier, potentially lack of diversification, and the potential liquidity items that we talked about earlier.
Great. Well, that's going to wrap up lesson number 5, which is our last lesson. And I think we're coming up close to the end of our time slot here. Why don't we conclude by just having each of our presenters provide some concluding thoughts. Why don't we start with Dax?
Sure. I guess what I'll say first of all is that Bitcoin creates strategic opportunities. So be strategic here. And I think it's not only appropriate for corporations to have blockchain strategies, but very important for them to consider their very specific Bitcoin strategy as well.
Tom, do you want to go next?
Yeah, look, I think we've talked about, there are a lot of moving parts here, but each of them on their own is manageable. And the key here is coordination and teamwork among the board and senior management, the legal, financial, and accounting teams, and your outside advisors. It's critical to do to make sure that that works so you can develop and execute a Bitcoin strategy that's going to make sense for your organization.
Una, you want to go next?
Sure. And to echo some of Tom's thoughts, I think it's extremely important for companies to find the right external advisors with the necessary Bitcoin expertise. I think our Bitcoin journey would have been very different if we didn't have guidance from our seasoned advisors like Tom and Dax. And I also think having good collaboration among internal teams is key for us. So I would advise other companies to make that a focus.
Sort of building on Una's final thoughts, I would just add that, you know, we were I think we're the first publicly traded company to kind of do what we've done. And there definitely was a lack of a good organized information out there about how to think about Bitcoin in the corporate context, the issues you have to address if you want to have the corporation invest in Bitcoin. And so we're really, really happy to have had the opportunity to make this presentation and also to open source a number of the documents that we developed as part of our journey. And I hope we've helped to start filling that vacuum somewhat through this presentation and those documents. And hopefully we're making it easier for others to pursue a strategy like ours. So with that, thanks everybody for your attention. Hopefully you found it useful, and we'll sign off now. Thanks.
Окей, значи има 10-минутна почивка. Твърде много неща казаха, нищо не успях да запомня, освен най-важното. И то е следното. Ако купуват GBTC shares от Grayscale, едни закони ги хващат. Ако купуват директно биткоин, законите са различни. С други думи, компаниите това, което искат да правят, е да купуват биткоин директно, а не да купуват акции на други компании, които имали биткоин, или да купуват шерс от някакъв фънд, който работи с биткоин. Така са написани законите и е много важно това, че биткоин е потвърдено, че не е security в щатите. Че компаниите буквално трябва да купуват точно, конкретно биткоин върху блокчейна. Те имат право да плащат после на кастодиан, който да ги иншурва и да ги държи и така нататък. Но не и да купуват на Grayscale продукт.
you might be. We're going to bring it home. 5th out of 5 Bitcoins for corporations session at MicroStrategy World. Thank you all for attending and listening, and also for the active chat participants. I've had a chance to just read along, and you are a hilarious bunch and an engaged bunch. So thanks for that. So we started off with Bitcoin macro strategy, which was really sort of the why corporations should consider investing in Bitcoin. Then we had the corporate strategy, which is the how. What are the different ways you might want to invest in Bitcoin? Then we went through the playbook, which is the what, sort of the step-by-step. And then we had the legal considerations. And now we're going to talk about finance considerations. And I have with me here 2 partners from Deloitte, Rob Massey and Amy Park. Maybe we'll start with some brief introductions. Amy, do you want to introduce yourself, your role at Deloitte, and tell us about your illustrious history and obsession with Bitcoin?
Thanks, Fong. Hi, I'm Amy Park. I'm a partner in our national office accounting group. I focus on all things accounting related. I specialize in some topics outside of digital assets, but spend a lot of time focusing on digital asset accounting. So my Bitcoin, I'd say, interest and journey started about 5 years ago while I was at the FASB. So the FASB is the Financial Accounting Standards Board, and I was doing a practice fellowship there. They are the governing body that prescribes the accounting rules in the US. And I was working on researching for their agenda requests that they received related to accounting for cryptocurrencies, things like Bitcoin, like what we're going to talk about today. So unfortunately, my time at the FASB was not long enough to complete that extensive pre-agenda research that they do, but that wasn't the end for my digital asset journey. So when I returned back to the firm at Deloitte, I quickly got engaged into our blockchain and crypto space, and I've been serving clients in both an audit and an advisory capacity. And I spend a lot of time focusing on the accounting issues. I also, Fong, as you know, serve on the AICPA Digital Assets Working Group. So that's a task force that hopefully I'll talk about a little bit more later, that talks through some of the accounting challenges and just how to account for some of the transactions in the digital asset space. But happy to be here and looking forward to our conversation today.
Awesome. So if anyone likes or dislikes the current accounting standards as it relates to cryptocurrency, they can reach out to you. Is that right? You're the one responsible?
Well, I'm the one who is responsible for starting the research, and then I'll share a little bit later, hopefully, about where they're at in their process.
Awesome. Okay, Rob, tell us about yourself.
Thanks for having us, Fong. Rob Massey. I'm based just outside of San Francisco. I'm in my 9th year serving across blockchain digital assets, including Bitcoin, which is a little bit awkward to be a CPA practicing dedicated to a space that there's almost no rules on point. That's a little awkward given the volume. But so what do? We work a lot by analogy to some really old case law. We have a lot of conversation with regulators, but what I look after is our tax practice as it relates to blockchain digital assets, crossing competencies and borders. And by serving a high volume of clients and seeing similar transaction types orchestrated differently, a little bit of difference in facts here and there, in the absence of rules, you begin to get comfortable on what the answer should be. What are the norms, if we call it? So we end up, just digging in across competencies and serving across people who want to lean in and invest in Bitcoin, use digital assets in their trader business, invest through different vehicles, and develop unique products associated with digital assets. So I end up collaborating across a lot of my favorite partners. Amy and I spend a whole lot of time together and have some good time with it, and others across audit and controls in our consulting practice. So thanks for having us.
Oh, thanks for being here. So you're both very modest. I do think we have 2 of the foremost luminaries when it comes to Bitcoin and accounting and tax. So we'll jump right into this. I'm sure you have a lot to share. Let's start big picture. Before we get into the financial point of view, you practice in this space a lot, especially with large corporations. What has changed in the last 12 to 18 months? Overall environment for Bitcoin and its role with corporations?
Maybe I'll start, and then Rob, you can chime in. So we've seen a pretty big uptick in terms of interest, not only in Bitcoin, but in digital assets in general. So I think particularly as other forms of investment may not be viewed as kind of giving people the returns that they want to expect. And if you look at the price of Bitcoin recently and how it's pretty much soared, I think people are now getting more comfortable with actually holding it. So several years ago, I think a lot of companies were very hesitant to hold it. You're now seeing a lot more, mainstream players, like you mentioned before in some of your earlier sessions, Fong, about companies that are getting comfortable holding it. I think also, in addition to just holding Bitcoin, companies are looking beyond holding it as a form of investment, which I know is what you and MicroStrategy and your company is doing, but they're also looking at it as a form of payment from their customers. So we see that, or using it in their businesses. We see a lot of companies who are also interested just in the underlying, like the blockchain technology. So how does that technology get used, and what are the different use cases that they can use within their businesses? We're also seeing funds who are starting to hold more, and in terms of digital assets, and giving the everyday investor the ability to invest through their funds and invest in these digital assets. And I think clearly by your registration numbers for this conference, there's obviously a big interest and big focus on just learning more about digital assets in general. So I think that's a couple of things that we've been seeing. I don't know, Rob, if you wanted to add a few things on what you've been seeing as well.
Yeah, I mean, it's interesting. We've seen Bitcoin on balance sheets for almost a decade now, but you didn't know it was there because it was small. Right. Yeah. It was retailers that were taking it. They'd hold a little, but not much. They'd convert, real time to fiat and leave it there. So the accounting questions have been around, the tax questions have been around, but it didn't matter as much to public companies because it was immaterial. Now it's really there, right? It's in a big way. It's showing up in public financial statements. These are material transactions, they're material investments. It causes people to dig in. So I think it's the brand names engaging those who are investing, the corporates investing, but also, we've seen funds invest in this space for a long time, new entrant kind of funds. Now it's the brand name funds that are looking to engage, some level of exposure to digital assets because people are asking about it. And Bitcoin does bring a unique value proposition among others. And it's a different type of asset when you look at accounting and tax considerations. So I'd say last 12 to 18 months, it's the same, just bigger, more bold, brand names bringing it into mainstream.
Yeah, Rob, and at least like when I was at the FASB and we were doing some of the outreach as part of our pre-agenda research, at the time it was about 5 years ago. So, quite a bit of a time ago. Most people that we were talking to were saying, one, if they were holding it, they didn't necessarily want you to know. And that certainly changed. And two, if they were holding it, they were very hesitant to hold a large amount. And so it wasn't material and you weren't seeing it in disclosures and, investor reporting, et cetera. So that's definitely something that's changed over the last several years.
Yeah, so it sounds like the wave is really starting to move in the corporate direction, which is great. And so you put out a recent white paper that we also have on our website on the Bitcoin for Corporations page. On Bitcoin for corporations, and thanks for doing that. I thought it was very thorough and well written. Tell us, as you went through that research process and writing the paper, what were some of the surprises that came out of it?
Yeah, I mean, I can kick this one off. You try and push something out that's relevant to a lot of people, and imagine the questions you get, and what is striking is that the points of view about why to engage with digital assets and Bitcoin and the value propositions therein, they have such great range and in why you would engage and levels of risk. And the nice thing is that, it's tailorable to a lot of people. You could choose to engage a little bit or a lot, different levels of risk in the business or outside the business. And all of those have unique tax, accounting, regulatory controls considerations. And so it's hard to boil something down into a few pages, but know that, I know you even referenced, Fong, sort of a playbook about how to approach something like you did, which is appropriate. But boy, that playbook changes drastically when you think about how it's used in the trader business, where it's used in the business, levels of exposure, and how that tone is set differently by management, board and how it can, you know, change on a moment's notice. So that was the big takeaway, just the range. You know, how do you push something out that's succinct but applies to a broad range of folks?
Got it. What about you, Amy?
Well, and for me, maybe it plays a little bit on, Rob, what you were saying, and also Fong, I think you had mentioned earlier in one of your earlier sessions, the aha for me was just the amount of collaboration that's necessary. So, you know, working with MicroStrategy, you know, all the calls we had with all the different folks within the organization and outside of the organization, it's like almost a cultural mind shift or a change, and you need to really get everybody on board. And it's not like you can just go invest in Bitcoin and like a silo can just go and invest in it. You really need to work together within the different, you know, parts of within your organization. So, you know, legal, finance, ops, risk, internal audit committee. I mean, the list goes on, but then also with the right advisors, right? To Rob's point, you know, we try to provide a playbook, but everything is also always comes down to facts and circumstances. And for every company, it's going to be slightly different, or you may decide to do things differently. So making sure you have the right advisors and the right type of advisors who have, you know, that expertise. And so I think the collaborative nature of it is something that's unique, and making sure that everybody is on board and everyone's educated, like they understand what we're doing. And I mean, I think, you know, the folks in the organization who don't usually deal with accounting, I think within MicroStrategy, they all know accounting now. They can talk accounting too. They could sit here and you don't really need me, but just making sure that everyone's, you know, knowledgeable and educated. And that collaborative aspect, I think, was for me, you know, a big takeaway, not only from our experience with you, but just as we were thinking about, you know, what is it that we really want to tell folks who are interested in this, and realizing that they can't just go out and do it, you know, in a silo.
Yeah, you know, just to add to that. Sorry, go ahead, Rob.
I mean, I need to say, we've been talking about collaboration a lot, but Fong, you set a higher bar. We would get on these calls, but there were like 30 different people, both within MicroStrategy and other advisors and crossing competencies. But you set an incredible tone of collaboration. Like, you all need to listen and lean in and engage to understand the dependencies that exist between all these different competencies, because all the norms of what you did in the past, those are all gone. This is new. And I think you in particular, Fong, you set a great tone of collaboration and engagement. That was what you expected, and you got it.
Yeah.
That's very kind of you, Rob. I think there's also, you know, I call it sort of the Bitcoin community, the Bitcoin ethos. It's almost like there's once you show everybody your Bitcoin tattoo and you're part of a group of people who are like-minded, who have similar, very positive beliefs around technology and the ability of technology to solve problems. And we as a software company absolutely believe that. But once you get into that group, everyone is working towards the same objective, and everyone knows there's a greater good to what you're working on. You know, you heard that from Ross, you heard it from Mike, you see it from the people who participate in the chat here. Like, there is something that everyone believes in together. And I think that does drive that collaboration. So one of the interesting things I saw you write about in your paper is, you know, when you start thinking about treasury, corporate treasury in general, right? The historically, people think of the role of treasury is, in some cases, a risk management role and preservation of capital, right? Really minimizing risk and making sure that the money is available for corporate use and purposes. And of course, for a long period of time, the safest way to hold your capital in a low risk manner would be either a T-bill or just US dollars. And I think what you heard, especially from Ross, make a pretty strong argument for is that is just no longer the case. It isn't the safest place to hold your capital. What are your thoughts on that? I mean, that's a pretty provocative point of view. It's one that we've taken, and we think 2020 really changed it. But what are your, you know, you've been in the space for a while. What do you think about that? And are corporations waking up to that aha moment?
Yeah. I mean, I'm the last qualified person to say what's right or wrong, but I'll tell you, it's an increasing conversation, and it is becoming the norm, and it's coming in through the board or treasury or management or shareholder group or something. Like, somebody is raising the question. And so what's good is that it's now become a conversation, and there are frameworks and there are structures, and what is most important, I think, is to be ready for the conversation, because it's not a light topic. And if there's a chance that this is somewhere on your radar for discussion, you need to be armed with what it is, what are the considerations, at least at a high level. And if there's a chance that you will engage, allow the runway to do it thoughtfully, because there's a lot of challenges and pitfalls along the way. So I think there's be ready for the conversation. And if there's a chance that the conversation is going to land in execution, then be just readiness. What does that look like for you? Who's the team? Do you have the right folks engaged at the right level of education to absorb this massive shift in what Treasury and those decisions might look like, particularly if you're a public company? So it's a real conversation. I think readiness is critical.
Okay. I think also being informed, make it your own decision, not because someone else is doing it, and understand the risks and the benefits. And, I think that's with any type of treasury management function where you're managing, you're balancing what are the risks that you want to take versus the benefits that you think you're going to receive. So be informed about that decision making. And I think, Fong, you mentioned that earlier today about just, read up on it and understand what we're talking about. And so being informed, I think, is really important.
Okay, so you guys are going to punt on that question because you can't directly advocate for Bitcoin. Is that what's going on?
But it's a thing, it's real, and there are really educated people who are qualified to make that choice, saying you should study it. And so I think everybody should have your own opinion so that you can facilitate a conversation between the board and management and shareholders.
Okay, I get it. I saw you wink when you said that, so I'll consider that good enough. All right, so I won't bug you about that anymore. Let's move on the next set of questions. So, all right, someone decides, hey, I want to invest in Bitcoin. Rob, maybe walk through just how can a corporation do it, a publicly traded company? What are the different paths or avenues to do so?
Yeah, so you could choose to engage directly, and that is to be the direct owner, whether that's self-custody or outsourced custody, which has sort of one, that's one mindset. You also might go in with a group, either a dedicated fund, or you could come in through something that's ETF-like and gain exposure through one of those vehicles. Or you might engage because you're buying, equity in a company with a large position, like somebody on the phone, or others that are engaged either investing in a large position or mining companies. There are those mining companies out there that you can invest in, and there's direct access, and they might also HODL as well. So all of those have different considerations for accounting, tax controls. There's levels of transparency. There's levels of risk. There's how much are you doing yourself versus letting other people do it. If you do choose to go an indirect path, then you're a little bit subject to the decisions of others. So in any of those, and that becomes when you're outsourcing something or going in through a fund or owning shares in somebody else, make sure that your risk profile and your level of thought as to what should be done and for the right reasons aligns with the other side, and that which is the party that's taking care of your investment. There's a lot of different paths, and so I think it's just digging in and getting behind the curtain to make sure you get it and you know what your investment represents. Okay. If you don't hold it directly, yeah.
So great. Let's go down two of those paths and talk about the accounting associated with it. And one path being directly purchasing and owning Bitcoin, and the second path being investing a fund, a Bitcoin fund. Maybe, Amy, you can walk us through high level. What does the accounting look like in one versus the other?
Yeah, sure. So let's start with the direct investment first. And I'm going to focus predominantly just on the accounting in the US. Just know that the accounting overseas internationally is slightly different. So if you hold an investment in a company, for example, like if I were to own MicroStrategy stock, generally I'm accounting for that investment at what we call fair value. And fair value is a value that I think that I could go sell that to somebody else, like a willing buyer in the marketplace. And since the MicroStrategy stock is listed on the NASDAQ, it's pretty easy for me to go Google it and look it up and look at the stock price. And as that price goes up, I get to mark my investment up. As the stock price goes down, I mark my investment down. Now, with a digital asset like Bitcoin, although a lot of people feel like economically it's very similar to like an investment, I'm investing, another form of investment, the accounting there is very different. So under US accounting rules, we treat it as an intangible asset. Now, Fong, you may say like, what? Bitcoin as an intangible asset? Aren't intangible assets things like licenses, patents, like a customer relationship list? Like, how does Bitcoin?
I think I might have said that exact thing. So.
I know. And I've had that conversation with, I don't know how many folks. Yes. So the accounting rules are different than maybe sometimes how you would think that things should be defined. So the accounting definition of cash doesn't meet, or Bitcoin doesn't meet the definition or the accounting definition of cash. It wouldn't meet the definition for a financial instrument. It doesn't meet the definition of inventory. And so by default, because of its not tangible nature, its digital nature, it's kind of just left in this, I'd say, residual of it's an intangible asset. Now, what does that mean for accounting? That means when you're going to account for it at the cost that you paid, subject to impairment. So impairment, if you think that it's no longer worth what you paid, what you originally paid for it. So that basically means as the price goes down, you're going to write down your asset. But as the price goes up or recovers, sorry, you don't get to do anything. And with the, with a digital asset like Bitcoin, where you have such huge market volatility, a lot of people really, really struggle with that accounting answer. And it's particularly challenging. So for example, if a company bought Bitcoin back in like 2017, I think that was when it first started hitting the $1,000 price range, which 2017, it's not that long ago, right? So if I had bought Bitcoin back then, I would account for it at $1,000. And assuming the price probably went down at some point, but let's just assume it didn't go down at all, it just went up. And in reality today, I think the last time I looked at it was just over $37,000. It may be worth $37,000 because I can go sell it to Rob today for $37,000, but on my accounting books and records, it's still reflected as $1,000. And that's the trouble with this accounting model. And I'll talk a little bit more later about, hopefully about how, what you can do with that accounting model, but, that's if you actually hold it as an investment. Now, your other path, what you described was if you're holding it directly in a fund. Now, accounting has specific industry rules for certain industries, and funds, they happen to fall within that. So funds get to apply specialized industry guidance, which basically allows funds to account for their assets at fair value. Now, just because an asset is in a fund, it's not as easy as it's always at fair value. You have to make sure it meets the accounting requirements to be, considered a fund. I won't go into too much detail on that. So, but generally, if you're investing in a fund, you're no longer investing in Bitcoin. You're now investing in a portfolio, probably, of, a pool of assets. And so that changes the nature of your investment. Your investment is no longer not tangible. It's actually tangible because you have, a share of a share of this or share or a unit or whatever of the fund. And that allows you to account for that fund slightly differently than if you were to account for it as a direct investment.
So if I get accounting benefits of mark to market, if I was to invest via a fund, why would I ever choose to then just buy and hold directly? What are the pros of buying and holding directly? And that may be as much an accounting question as it is a general question that folks might want to consider.
Yeah, and I think that goes, and maybe it was Rob that said before, when you start using other forms or vehicles of investment, you lose control. So when you hold Bitcoin, you can say, I want to self-custody it, or I want to custody it there, or I want to buy it at this exchange. I want to buy it at that exchange. I want to sell it to this person, like this, OTC market. I want to sell it at this price. You make all those decisions when you own the investment. When you are putting it into a fund, it's in a fund. Someone else A fund manager is probably making those decisions. Sometimes funds will prescribe, what kind of assets they have, but usually the investment advisor or the fund manager is the one who has the discretion to say, you know what, now I think we're going to expand our portfolio. I think Bitcoin's not it. I'm going to go to the next digital asset, or forget digital assets. I'm going to go back to like oil, or, you lose kind of that control of how you make your decisions and where your assets are held, which is actually in this space pretty important when we talk a little bit about controls and understanding, the non-tangible and the digital nature of digital assets. That's really important for some folks.
Yeah, it becomes a meaningful decision because of these dependencies, right? And these are new things. How do you feel really like they've nailed security? How do you feel like they're executing on the strategy economically, but also considering the tax ramifications? They've got the right methods in place. That's the stuff I think about. And going back to Amy's fair value accounting, if you hold it directly, not to add insult to injury, Fong, but if you do, right, anybody who impairs, usually, you book a deferred, right, book a deferred tax asset, but we didn't have a realization event for tax, right? If you've just marked it down. But if you're holding it, it's a source of, capital loss. If you were to sell it and you don't have a source of capital gains to offset, we need to evaluate whether or not you need a valuation allowance to actually to book that deferred. So it even makes the impact even worse. So some considerations there that go pretty deep, but just to flag it.
Yeah, and I guess the other piece is when you impair the intangible asset, and I guess it has to be assessed for impairment every quarter, right, based on low price of Bitcoin or whatever that asset is in that particular time frame, then that impairment ends up going through the income statement, right, Amy?
Yeah, it does.
Yeah, so it's funny, like when I think about Bitcoin, and I know a lot of the folks who are listening are part of this, believe in life, liberty, and Bitcoin. and what that, when you think about that, what does that mean? It means that I want to own my Bitcoin. I don't want someone else to own it. And I want to hold my Bitcoin. I don't want to sell it. And it seems like the accounting is set up against both of those things. Because if you wanted the better accounting, you wouldn't own the Bitcoin, you just invest in a fund. If you wanted the better accounting, you would buy Bitcoin when it appreciates, you would sell it so you can recognize and realize the gain. So it's not great. Amy, what are you going to do to fix this for us? I don't mean it that way. I mean, so you were at the FASB, you're on this AICPA working group. What do you think is going to happen next?
Well, so unfortunately, the AICPA and the working group, we've done a lot of great work. There's a practice aid that goes through a lot of both, not only the accounting, but also the auditing issues. And I'd say that practice aid is not only for auditors, it's for people who will be audited. So you know what your auditors are thinking about. But the practice aid and the working group are really focused on how do we think about these transactions in light of today's guidance? The AICPA and certainly the task force doesn't have the jurisdiction to set the accounting rules. That's all with the FASB. That's been given to them by the SEC. So absent the FASB coming up with, changing standard setting, I think this is the model that we'll ultimately be in. Now I mentioned I started that research agenda, the research on the pre-agenda project. Sorry, that was a mouthful. When I was at the FASB, when I left the FASB, that was still underway in terms of, the FASB doing research and outreach. Just last fall, they did have a public board meeting that talked about that agenda request. And at that board meeting, the board voted 7-0, so unanimously, to decide not to add a project. So I don't think that bodes well for any change anytime soon. Usually, I'd say standard setting, is a long process. And if they decided not to add a project back then, that's not to say they may not. They did say that they were going to monitor and, see how the industry changes and companies' use and prevalence of digital assets changes. So there could always be a project in the future, but it'll be up to the FASB to decide whether to add that project or not. And I will say, Fong, a lot of people who I talk to say, you're absolutely crazy. That cannot be the right accounting. But at that board meeting, you know, the board members talked and they pretty much reaffirmed that intangible asset model that practice has been kind of going to. So I'm not crazy. I'm just trying to figure out how to account for these within existing GAAP. And so I think we're stuck with this model for now.
Okay, you know, I think the model is what it is. You know, interestingly, you know, the whole idea behind accounting standards is to create transparency for all the stakeholders who invest in a publicly traded company, right? And in that case, many of the stakeholders are shareholders. Do you think folks understand that accounting and are starting to look through it and, you know, think of non-GAAP valuations and market valuations as opposed to book valuations, if you will? Like, are the investors getting pretty smart about the accounting and how they might want to look at it differently, if you will?
Well, so I'd say it's difficult to know what an investor thinks. But I think what's fair to say is that companies like MicroStrategy, you're in the driver's seat. You have control over the information you provide to your investors. And so while the accounting results may, you know, cause the asset to be recorded as an intangible, a company can provide the right level of disclosures that they feel is meaningful to their investors, not only in your financial statements, but in your investor presentations, et cetera, on your website. That explain kind of how the accounting. So what was the cost basis? What impairment did I record this past period? What's my life to date impairment? Where is that impairment recorded? If you wanted to back that impairment out, you know, not to say that the investor will or will not, but if the investor wanted to, they have that information. You could even talk about like, and I think Fong MicroStrategy did this in their third quarter 10Q when they first started their investment, but what's the value of one Bitcoin on an exchange and how many Bitcoins do I have? So, you know, if you really wanted to, you could figure out the value that, you know, our Bitcoin is compared to what we have recorded on our balance sheet. So I think disclosures are going to be important, and we'll see what investors, you know, how investors interpret that. You know, whenever I talk about accounting, people don't get it. I have to say it like 5 times and they still don't get it. So will investors understand the accounting? I'm not sure, but the thing that you can do as a company is provide as much information that you think is appropriate or that you think is meaningful and how you view your business and how you view your investment, and let them decide.
Yeah, that makes sense. And I do think investors generally are pretty sophisticated, right? Yeah. And are pretty sharp. And I think people are starting to understand the accounting standards, and they also understand the Bitcoin valuation as it exists in the market. There's a lot of places you can go get that view on valuation today.
Right.
And so, you know, hopefully at some point the accounting standards do change, but I think until then, I think you're right, Amy. I think people are fairly smart and sophisticated, and it shouldn't be something that ultimately deters somebody from trying to do what's right for their treasury, you know, versus sort of where the standards sit today. More broadly, Rob, you know, what is your view on the incoming administration? And, you know, maybe they're not going to take, you know, maybe they won't have the FASB take up, you know, the current accounting standards for digital assets like this year, right? Like Amy's been working on it for 5 years and then multiple years at Deloitte. I know things don't move that quickly, but there has been a lot out there about the incoming administration. And for example, Gary Gensler and the fact that he taught, you know, classes on, you know, blockchain and Bitcoin when he was a professor at MIT. And, you know, there's Cynthia Loomis is out there, you know, really a proponent as a Wyoming senator. What are your current, just big picture, what are you seeing out there?
Yeah, this is crystal ball time, right? Okay, so we have, don't forget, you know, Brummer with CFTC, a lot of exposure to the space, as well as Barr with the OCC. And so what I would say is they're bringing in a level of experience in the space. They're not asking for a blockchain or a Bitcoin 101 course. They've been around. They're showing up with their own points of view. They're showing up informed as to what they think They understand, I think, the ecosystem. They understand the industry. So I'm heartened by the fact that when they do speak or they make a decision, they're doing so with their own sort of experience built in versus learning it for the first time or relying on others who might be showing up to advocate for their positions. So I think that we can think what we want about their views, but they're doing so from a better starting point versus just picking it up now. And because the industry's shifted a lot, it continues to move, but it didn't start last week. And a lot of them have multiple years. They've seen stuff go well. They've seen stuff go poorly. They have direct interactions with some of the players, and so I think it's good. I'm hopeful that we're going to see some real thoughtful tone and real collaboration among the different groups. So I'm optimistic that we're going to see something thoughtful. I can't tell you when, but I like that they're coming from a place of experience.
Well, look, an administration that brings in thoughtfulness, experience, and is willing to do the work, I think it's great. So that's a good starting point. Amy, what does your crystal ball say?
Well, I was going to just maybe add on to what you were maybe starting off with and how the linkage between the accounting. So the SEC is not going, like, they don't have the authority to add projects onto the FASB's agenda. So that's all with the FASB. The SEC gives the FASB the authority to create the accounting rules for the US and for public companies particularly, but they can't, go tell the FASB, hey, you need to add a project on digital assets. What I will say though, is that the SEC is always open to talking about accounting. And so as, public companies always have the ability to, do what we call, or what they call pre-clearance or consultations with the Office of the Chief Accountant at the SEC to talk through some of the challenging accounting interpretations of current GAAP. Now they'll just say whether they object or not object to a company's, accounting view. And usually that accounting analysis follows, current GAAP rules. It doesn't say this is the GAAP rules, but I just want to completely ignore it. Are you okay with it? But they are open to that. And, I think we're seeing a lot more public companies are entering into transactions in the digital asset space where it's not really clear how to apply the GAAP. We are seeing more companies go to the SEC to pre-clear and consult on some of their accounting conclusions. Now, that's not adding a project and changing GAAP, but it's how a company is interpreting and reaching an accounting conclusion related to their specific facts and circumstances. My crystal ball is black, so I don't have anything else to say about that. Right. But did want to clarify the ability for companies to do the consultations with the SEC, and they are always open and willing to talk to registrants.
Okay, great, thanks, Rob. There's a lot to think about from a tax perspective. Give us just a general landscape. What are the key considerations companies who are investing in Bitcoin should be thinking about, especially if your strategy is to invest directly into custody? Talk to us about wallets and why a company needs to segregate, et cetera. So just give us a general landscape. I know you could talk about this for days. And it can get very fascinating, but you can go a little long, but try to keep it at a level that people will understand.
Yeah, we spent a bit of time on this topic, and one of my favorite words, is segregation, and that is not a political statement I'm making, and that is rather that. Sorry. You need just 50. You have a 15-second delay on me, right? So that's good. The point is that Bitcoin, among other digital assets, are mostly fungible unless you go into some extreme circumstances to sort of create proprietary wallets. So what you do is you segregate tranches such that you have the ability to track basis and lot relief as you wish. So if you were an OG and you had a bunch of $300 basis Bitcoin, and then later on you increased it 1,000, and then you kept on going over time, and 10,000 and 30, and then even up to 40, you would like those tranches to be segregated into different wallets or addresses so that you can choose if I'm going to sell some if I'm going to diversify, if I'm going to shift something around. I want to match what the current price is probably to the tranche that I have it at to minimize my gain, right? If you don't appropriately segregate your digital assets, then it's believed to be very difficult to use specific identification. So you would be instead bound by FIFO, first in, first out, which is not super helpful in a bull market. So we talk a lot about wallet structures. We've spoken about that, and we coach others. That means different things to different people, and it may be different times that you invest, different tranches like that. It may be a band or a range of values, etc. Character is another thing that we think about a lot. If you're investing, then that's probably going to be a capital asset in nature. If it's used in your trade or business, then that could be it could be ordinary trade or business property, and that gets to other methods you might employ. It gets to sourcing. It gets to other things. And so we talk about character. Entering or exiting a fund or a corporation using Bitcoin as an investment, a little different than using fiat currencies. And so it's really important to make sure that your general rules, your general thoughts around non-recognition events and contributions or distributions, that's different. It doesn't always work the same. And so we're not dealing with traditional commodity securities and fiat here. And so you look at the rules to apply. How do the characteristics of that digital asset work with those rules, and then you figure it out. And then it's really the products. Now we're seeing financial instruments, financial products being developed, loans, DeFi. And so, while the economics may be similar to other instruments with other types of assets, because it's a digital asset, we again look to what it is, how do the rules apply, and then, get back to recognition, sourcing, basis tracking, and all the rest. So there's just sort of a high level overview of some of the things we think about.
If you want to talk about loans and digital asset loans and the accounting for digital asset loans, you think the intangible asset is bad, this accounting is bad.
Okay. We'll spare the audience from that accounting.
Come talk to me if you're interested.
That'll be the next course, the next video, if you will. Rob, two other things on the tax side. When someone wants to move their Bitcoin that they have in custody from one custodian to another, what are the tax impacts of that?
Yeah, if it's yours and you're just moving it between custodians, that should be a non-recognition event. Know that the optics are important though, because these are if it's an on-chain transaction, then that is transparent to you, to the regulators, to everybody. And so the default presumption may be that it moved because of a transaction, not just because of where you held it. So this is where you want to have intentionality behind the documentation. So no, I just moved it. It now sits over here.
Got it. Well, and that's nice. So what about investing in Bitcoin or holding your Bitcoin onshore versus offshore funds, right? And tell us about sort of, for companies that may have, cash or fiat currencies that are offshore and they wanted to invest in Bitcoin without repatriating, or should they repatriate? Just talk to us a little bit about that.
Yeah, no, it's a good question, and it really depends on the lens you're applying from where you're coming from. So U.S. investors now, if you're a corporate, then it sort of doesn't matter now because everything's taxed in the U.S. on a real-time basis. There's not real motivation to do that. But if you are moving it because you need to deploy capital into a non-U.S. subsidiary just because they need something there for ratios or other regulatory requirements, know that digital assets don't cross borders as gracefully as fiat currencies. So you got to watch for what that transaction looks like. You also have to look for perhaps withholding tax obligations, how that fits into the treaty network and the two different jurisdictions we're discussing. Others may be sensitive, other non-US, as an example, holding digital assets here in the US, then different considerations there, effectively connected income, basically. And so people rethink when you're using digital assets for different reasons. Let's play the risk game and how it could be conceived, and do you need to structure around it?
Okay, awesome. So things to think about there. All right, this is great. Thank you so much. Maybe we can close with both of you. Last words of advice. You know, someone is in this call or is watching this video and saying, hey, look, I'm ready to do this. I want to invest in Bitcoin. There are a lot of reasons why I want to do it. What advice would you give someone before they sort of jump in or as they're starting to plan the process?
Amy?
Yeah, thanks, Rob. I'll start. So we talked a lot about accounting and tax in our session today. We didn't really have that much time to talk about internal controls. And when you're investing, you nod your head, Fong, because you know. When you can't have a conversation about investing in Bitcoin or make that decision without talking about internal controls. It is super important in this space and really challenging sometimes given the nature of the asset. And not only are we talking about the controls like within the four walls of your organization, so things that you have control over, but now we're also talking about potentially controls outside of your organization. So I think, you know, for example, most companies, we're not seeing a lot of companies choose to self-custody. They're usually, you know, looking for a custodian. And so understanding the controls that are in place at that custodian are really important. You know, that's only one example. Our white paper, Fong, that you mentioned, you know, talks a lot about, you know, some of the considerations related to controls, but I can't be a true auditor at heart without not having a conversation about internal controls. So maybe not, you know, my advice, but, you know, one thing to not, you know, to also think about is internal controls in this space.
Great, thank you. Yeah, and sorry we missed that topic, but it's a very important one, and I appreciate you reminding us about that, especially when it comes to the custodian side, for sure. Rob, send us off with some uplifting words.
The auditor.
Not internal controls, something more uplifting and exciting.
Well, I mean, we've spoken a lot about complexities, but this is doable, right? With the right people, with the right tone, with the right level of collaboration. Just allow some runway. You know, you don't want to create too much anxiety in the system. Usually, whether you're talking about investing or using it in your business, you're going to iterate probably a lot, and you're going to hit some challenges you didn't anticipate. And so just allowing some runway to bring a sense of grace to do it right. I think if you apply too much time pressure to get something done, then you've, you know, created risks. It's doable, but I think that if you are very, you know, careful, allowing people to think, to absorb, get together as a group, absorb, come back, and allow some iterations, then that sense of grace is probably going to help assure, you know, stronger levels of quality. Probably it's also going to be more enjoyable for the experience. This can be fun.
Well, thank you so much, Rob. Thank you so much, Amy. I really appreciate your time. Also appreciate your partnership during the process. And for those who joined us, thank you also for your time. This concludes the Bitcoin for Corporations session for today. We do have other MicroStrategy World content that is continuing today. And if you go to the sessions, you'll see what else we have today. And then we start again tomorrow morning. And we also start our Bitcoin for Corporations segment tomorrow too, where we'll have 10 awesome vendors who will discuss the Bitcoin landscape, their experiences, and what they have to offer too. So I appreciate all your time, and have a great rest of your day.
Thanks, Fong.
Thanks, Fong.
Окей, спирам стрима. И лека вечер.